Hello, my dear CA Inter students. This is your Mr. GST who actually makes GST good and simple tax for you. So, as you have been asking, sir, 50 case studies, 50 case studies, the MCQ marathon. Yes, here it is. And I have invested almost 16 plus hours in the recording studio to give this content in a very crispy way for you. Seriously, very good discussion, good number of adjustments, good number of tricky points. Everything has been stressed out. So, my only request is do watch this video and also please do share this video with your friends and like and show your support. That will be more motivating and this will reach even bigger audience. So do support me for the efforts what I have put here, and I seriously believe you will enjoy this video and will gain so much of knowledge, and I'll be waiting to hear from you from the comments, all these things. So enjoy this discussion, guys. So coming to first case scenario, actually here, yes, I have already made the analysis of all that. So to make it easy for you and to cover it in quick time. So first, let us go through the questions. That is what first strategy always. First go through the questions, then go with the case study. Okay. Now, in first question, they have asked, what is the due date for filing the final return? For filing the final return, you know the due date is nothing but what? Within 3 months from the date of cancellation or effective date of cancellation, whichever is later, that we have to check. Next, what are the following statements which are correct? And in this, they are fully talking about re-availing ITC, re-availing ITC, re-availing ITC. So the question is all about re-availing ITC. And if you see, they spoke here, there is a time limit for re-availing ITC, time limit, time limit. But in this case, they have given ITC can be re-availed without any time limit. For availing ITC, there is a time limit, but for re-availing ITC, there is no time limit, as you know. So this should be the correct answer. Even without checking the question, we can tell that. Next, in this question, they're asking what is the tax to be deducted for governmental agency of Gujarat. In this, they're asking about tax to be collected. So this is TDS question, this is TCS question. And another interesting part is here they are not asking you to ignore CGST, SGST, but here they are asking you to ignore the bifurcation of CGST, SGST. So please be careful here. Next, what is the last date of issuance of invoice? That means this is due date for invoice. They are not talking about time of supply. In the question, if you see, they have given information regarding how to calculate time of supply. Everything they give the information. But the question is not about time of supply. This is another catch here. So please be careful. Okay, now coming to the point. This is a company, Sambhav Limited, which is registered in and manufacturing and doing e-commerce operator transactions in multiple states, doing business domestically and internationally. They are also operating e-commerce transactions for third-party transactions, as well as on their own account also they are selling the goods or services through portal. Okay, now they have given following details, and if you see, there are some 5 paragraphs and 5 paragraphs related to 5 questions. First paragraph, they give information regarding they have discontinued the operations in the state of Assam and they have applied for cancellation, all this nonsense. And see, they give various information, the registration suspended, application of cancel. This is not required for us. We need to check what is the order of cancellation, 2nd Feb, and it is cancelled with effective from 31st January. We should see whichever is later, which is later, 2nd Feb. From 2nd Feb, within 3 months, you should apply for final return. You should file the final return. So 3 months from 2nd Feb is the answer here. Okay, simple. Next, second one, as I told, already second question we have solved. Company paid an amount of 5 lakh along with tax payable thereon to the supplier pursuant to settlement of dispute current financial year. So after 180 days, all this nonsense and all there in this particular paragraph. But as you know, for re-availing ITC, there is no need to time limit. So this information, whatever they have given, is straight away irrelevant for us, just to confuse you. Okay. If you have any doubt, you can pause the video and you can read this paragraph. Next, the company is providing accommodation services to governmental agency registered in Gujarat for the employees coming and staying in the Gujarat for some training purpose. So, hotel is in Rajasthan. Accommodation is provided in Rajasthan. So, location of supplier is in Rajasthan. Place of supply, as you know, for immovable property, the location of immovable property, Rajasthan is the place of supply. Location of supplier and place of supply falling in one state, but recipient is registered in Gujarat in a different state, then TDS provisions will not come into picture here. So, the answer for third MCQ should be nil. Okay, next, they're talking about TCS here. If you see, in this case, what they are trying to tell now, sir, during the month of Jan, they have supplied goods worth 75 lakhs, and in the same month, you got 15 lakh returns. Okay, 15 lakhs has been returned. So, in the same month, Jan month. And also they are selling their own products for 20 lakhs. Own products, whatever you are selling through your own website, TCS will not come into picture, you know. And also they are providing hotel accommodation services where hotel owners are not liable for registration under section 22 subsection 1. That means 9 subsection 5 says e-commerce operator is liable to pay GST. Where e-commerce operator is liable to pay GST, there is no requirement of TCS. So TCS will come only for 75 lakh minus 15 lakhs. The net supplies on 60 lakhs you will get TCS 0.25%, 0.25% CGST and SGST. So The answer should be, what is 60 lakh into 0.25%? It is 15,000. So ignore the bifurcation. So they have said ignore the bifurcation. So 15,000, 15,000 total, 30,000 will be the TCS. So this will be the option, correct? Ignore the bifurcation as I told. Okay, here if at all there was an option 15,000, we will be doing the mistake. Are you understanding? Because with the excitement to do it fast, we will commit these type of mistakes. Okay, fine. Now I have the excitement to finish this video quickly and help you. So I may be under stress, but you should not be under stress or pressure. Okay. Even though we are under stress and pressure, we should not do the mistakes. Now, coming to the last question here. So, this is regarding construction of road. They have given total time taken more than 13 months. That means this is continuous supply of service. And also, they have said a contract is signed in such a way the last tranche payment of 25% will be paid only, or it is linked to completion of the construction and linked to completion certificate. So completion certificate is issued on 15th Jan, means invoice also linked to completion certificate. So invoice deadline is 15th Jan. They give here actual invoice date, payment date, all these things and all. Just to confuse you, don't calculate time of supply here. You should calculate only last date to issue tax invoice, that is 15th Jan. So 15th Jan is the answer. Yes, 15th Jan. Okay. So option B. Okay, that is first case study for us. So coming to second case scenario, actually, see, yeah, let us go with the questions first of all. So coming to the first question, they're asking about aggregate turnover for the quarter April to June here. And next, following options, which is correct. See, when you are going through MCQs, please be careful whether they're asking following options correct or incorrect. So here they're talking about correct statement. Regarding availability ITC of procurement of goods for corporate social responsibility. For this, you need not read the case study also, sir. If you are procuring any goods for CSR activity, you cannot take ITC. Here there is an option, ITC is not available. So this should be the answer. Remaining options they gave, it is available, it is 50% available, it is available if you provide it to register, all this. So option A is the correct answer. Okay. Next, claim ITC for the invoice dated 20th March of the previous financial year up to 30th November of the succeeding financial year or actual date of filing annual return. We will see that. Next, subsidy received from environmental NGO. What we should do, we have to check that. Next, following statements which are true, you should identify for non-payment of consideration by Bangalore unit to Pune office. That means Bangalore unit, Karnataka, Pune, Maharashtra. So, distinct persons. This restriction of 180 days within that you should make payment is not applicable for Schedule 1 transactions where without consideration you are making. For that, it is not applicable. So, prima facie, it should be the right answer. Let us see that. I hope that should be the correct answer. That's all. Okay. Now, coming to the question here. Sir, Rapid Move Logistics Private Limited is a company. From now, we will call it RLPL, registered in Maharashtra, Pune. Doing logistics, warehousing, transporting of goods, cold storage, perishable consultancy, everything, whatever they're on the planet, they are doing everything. They gave information with respect to April to June. And because there is a question on aggregate turnover in April to June, I have listed here 6 points I have given, whether it is sale or purchase, all that stuff. Now, logistics services they have provided to Hanuman Enterprises and Shiv Industries, 28 lakh and 22 lakhs. This is the sale, logistics services provided. So, sale, obviously, you will take it as turnover, 28 lakh plus 22 lakhs. Next, warehousing of vegetables to Safal Farms and also to fresh veggies, 8 lakhs and 4 lakhs. That is also sale, we will add it to aggregate turnover. Sale of land is neither SOG nor SOS, you will not add it to aggregate turnover. Also, received consultant, received means purchase, it is not sale. So, we will not add it to aggregate turnover, let us not worry about that. Next, supplied goods to newly opened warehouse in Bangalore for 6 lakh, worth 6 lakhs, valued 6 lakhs. Valuation is not there in your syllabus for CA Inter, but still, such worth 6 lakh, they only give 6 lakhs. Interstate supply between distinct persons, Pune to Bangalore, all these things. So it is supply only, it should be added in aggregate turnover definition 6 lakh. As I told, company has paid GST but did not make payment of invoice within 180 days. That time limit of 180 days is not applicable here, as you know that. Next, in addition to the aforesaid transaction, they have spent amount of 5 lakh for procuring goods to use in CSR activity. This is also purchase, you will not add in aggregate turnover. And for that, you cannot take ITC also, there is a question on that. So if you see the aggregate turnover now, sir, aggregate turnover is 28 lakh plus 22 lakh plus 8 lakh plus 4 lakh plus 6 lakh. So it should be 68 lakhs. Okay. So 68 lakh should be the aggregate turnover. Yes, 68 lakh is the aggregate turnover. Okay, fine. Next, coming to the next one. They gave a paragraph here regarding subsidy. Received subsidy for 40,000 from an environmental NGO for adopting green for refrigeration technology and using it for electric vehicles for logistics. See, this subsidy is linked to performance metric, that is for carbon reduction. It doesn't have any role to play with respect to price of services. Very, very, very important. The area where you may do mistakes. See, this subsidy is not linked to price, but this subsidy is based on the performance. Performance. So, because you are adopting this technology where you are reducing this pollution, all these things, so they are encouraging you for that. So, this subsidy is not having any link to the price. So, it will not be added to the value of supply. Subsidy received from environmental NGO excluded from transaction. It is not directly linked to the price of supply. Included, no. Okay, so this is the correct option. If you see excluded from transaction value, as it is not uh, directly linked to price of supply. Okay, simple. Next, coming to the next one. The company has been complaint filing annual return, and they filed annual return of the preceding financial year 15th October. As you know, there is a deadline for taking ITC on tax invoice. There is a question here. So we should take 15th October or 30th November, which is earlier 15th October. So this should be the answer. So we are done with first, second, third, fourth, fifth also we are done. So with this, we are done with this particular case study number 2. Right. Coming to case scenario number 3. See, first of all, coming to the questions. Whether revised tax invoice issued by Paradise Resorts is valid is the first question. So they have issued revised tax invoices. Is it valid or not? We have to check. GST treatment for performance by Darohar Group. Okay. Next, will there be any GST liability on interior designing services provided free of cost by DEF Interiors? Which of the following statement is most appropriate? In this, if you see the statement itself, you can answer the question, because since the import of services from related person in the course or furtherance of business will be treated as supply, even if it is made without consideration, seems to be logically correct one. Because import of service from related person without consideration for business purpose is business is there, without consideration is the related person. So this is the correct option. Here they give, since no consideration was paid, same is not taxable. Import of services from related person exempt. So wrong. Fully taxable irrespective whether it is business or personal. So this is also wrong statement. Import of services, this is the correct statement. Without consideration, business purpose, related person. So that should be the correct answer. Next, we should check what is the time of supply for marriage function hosted on 1st June. Okay. Next, which of the following statements are correct? Place of supply with respect to location of immovable property, always it will be the location of immovable property, Rajasthan. No GST is payable in case of transfer of business as a going concern. Without reading case study itself, you can answer this, because place of supply for any services provided to any person with respect to immovable property, the location of immovable property is place of supply. So both statements are correct here. That is the option. Without reading case study, we can answer 2 questions. So here, if you see in this case, what has happened now? ABC Associates engaged in hospitality sector, Rajasthan, starting a resort called Paradise Resorts and starting their business operations on 1st April, and they became liable for registration on 1st June and applied for registration on 15th June. They got certificate on 1st July, revised start in their tax invoice. They have started issued from 15th June. If you see, when you become liable for registration within 30 days, if you apply, this fellow has applied, effective date of registration is the date of becoming liable, that is 1st June. If you have issued revised tax invoices, you should have issued revised tax invoices from 1st June till the date of certificate, 1st July. Okay, but this fellow issued revised tax invoices from 15th July. That is absolutely wrong. So the answer is option B. No, the revised tax invoices may be issued for the period of 1st June to 1st July within 1 month from receipt of registration certificate. That is 1st July. That should be the correct option. Okay. Next, this hotel interiors availed interior designing free of cost from DEF Japan. Proprietor is the son of one of the partners. We have answered that actually. Importing services, all that. So no need to worry. Other relevant transactions. Mr. Ajay GST registered Madhya Pradesh, lodging accommodation in resort for 2 nights, but still place of supply will be the location of immovable property. New Year celebrations, Paradise Resorts, Darohar Group, classical music troupe. Sir, classical or folk music, dance or theatre is exempt only if the consideration is up to 1.5 lakh, otherwise it is fully taxable. So here entire consideration is taxable. That is the option. So with this, we are done with 2 questions. One last question is there. Yes, regarding the time of supply. Marriage function hosted on 1st June. Invoice is given on 28th June. Consideration is given on 29th June. Service is completed on 1st June. Within 30 days, invoice is present. That means invoice or payment, whichever is earlier, is the time of supply. So 28th June or 29th June. So 28th June will be the time of supply. So that is the concept. Okay. So with this, we are done with the third case study. Okay. Now coming to case scenario number 4, actually a very important case scenario for you because it was tested in CA final exam and it has been given for you also. Very important. Let us first focus through the questions. Simple. They're asking about what is the value of exempt outward supply for the month of Jan. They're asking about what is the ITC available for you for the month of Jan. And of course, they're asking you gross GST liability before reduction of ITC for the month of Jan. There is a concept here. So now, if you look at this question is based on this housing society, that maintenance fees, all that. Here, there are 3 BHK flats 100, 4 BHK flats 100, shops 20, and there are different blocks A, B, C, D, E, all these things. Okay, I'm sorry. F, E, F, like that. So there are different blocks here. So in these blocks, there are different units. Okay. Now, flats and shops are members of Mahadev Housing Society. So here flats are also there, shops also there. So shops in Resident Welfare Association. Okay. So these all are members in the association. Here they are charging maintenance fees 8,000 for 3 BHK, 10,000 for 4 BHK. But this includes property tax 1,000 rupees and 1,500 respectively for 3 BHK, 4 BHK. Here one very important discussion for you is property taxes, any electricity payments, the statutory dues will not be considered for calculating the 7,500 limit. So here if you see 8,000 minus 1,000 rupees property tax, 10,000 minus 1,500 rupees property tax, here it will be only 7,000 and here it is only 8,500. So I repeat, for calculation of 7,500 you will not consider statutory dues. So if you remove, this is falling within 7,500, this is above 7,500. So this is exempt and this is taxable. Not only that, this property tax, whatever we are collecting, is ignored for the calculation of 7,500, but it is exempt under GST. That is exempt under GST as well. So if you see this 1,000 rupees into 100 flats is exempt here. Are you understanding the point? This 1,000 rupees into 100. So what is that amounting to? 1 lakh. And again here 1,500 in 1,500 into 100 flats. So I already told you 3 BHK flats 100, 4 BHK flats 100. So this also amounting to 1,50,000. Why am I calculating this exempt turnover? Because the question itself, first one is what is the value of exempt supplies. So I repeat here, see, out of this 8,000, 1,000 if you remove, 7,000 is exempt, this 1,000 is also exempt. Out of the 10,000, sir, if you remove 1,500, 8,500 is taxable, 1,000 is exempt. So, uh, 1 second, into 100. So, there is 7 lakhs. Here into 100, 100 flats, there are 100 flats. Okay. Here it is 1 lakh. Here it is 8,50,000 and here it is 1 lakh. If you see, this is exempt, this is exempt, this is exempt, and this is taxable. Okay, that is the point here. Okay. So now coming to the next one. So I repeat that property tax, all that, it is exempt under GST, number one. And number two, while calculating the 7,500 limit, you should not consider the 1,000 rupees. So that is what the point. Okay, fine. Very interesting and important adjustment for you. Next, not only that, maintenance charges collected from each shop. From each shop, you are collecting maintenance charge 7,000. They did not speak anything about property tax here because it is very much within 7,500. It is also exempt under GST. 7,000 into 20 flats, 1,40,000. Interest on FD they have received. This is also exempt under GST, you know. And 4 generators costing 1 lakh were purchased. This is about purchase. Okay. From registered supplier for power backup of the blocks, of which 2 were installed for 3 BHK, 2 were installed for 4 BHK. See, 4 generators they have purchased. For 2 generators, you cannot take ATC. For 2 generators, you can take ATC because 2 generators are used for 3 BHK. 3 BHK maintenance, just now we have seen exempt under GST. 4 BHK maintenance is taxable. So you can take ITC for 2 generators but not 2. The amount capitalized in the books but no depreciation charge. As you know, 16 subsection 3, depreciation benefit not claimed, then you can take happily ITC. Pipes and other sanitary fittings costing 25,000 for block A from registered supplier debited to P&L. So revenue expenditure you can take ITC, but this is related to block A. If you see block A here, Block A is 3 BHK flats. Again, it is exempt turnover. For exempt supplies, if you purchase anything, you cannot take ITC. So here, I can tell you, sir, here there is no ITC. Three members owns two flats each of 3 BHK type. See, even though you own 10 flats in a resident welfare association, each flat will be counted as one member. So even though one fellow is having multiple flats, every flat is considered as a different member. So that is what you have to keep in mind. That means 100 flats means yes, we should take 100 members. So into 100 only we should do. We should not reduce that. All inward and outward supplies are intrastate. Super. Ignore the effect of common credit. Common credit is dealt in Rule 42 and 43 in CA final, that is not there for you in CA inter. So that they are asking, ignore that effect of common credit. All conditions necessary for claiming ITC have been complied. Not claimed any depreciation on assets. Super. All the figures are exclusive of GST. Super. CGST, SGST, IGST. Now, if you see value of exempt supplies, if you see exempt supplies here, we have made a count 7 lakh, 8 lakh, and 9 lakh. And shops is there? No. So it is 1 lakh 40. So 10 lakh 40. 10 lakh 40 plus 75,000 fixed deposit. 10 lakh 40 plus 75,000. What is 10 lakh 40,000 plus 75,000? Sir, it is 11 lakh 15,000. 11 lakh 15,000. So if you see 11 lakh 15,000 option itself is not there. We have missed some calculations. Let me just calculate one more time. 7 lakh, this amount we have taken, plus 1 lakh, we have taken that. Again, this amount 1 lakh 50, 1 lakh 50 plus we have to take 1 lakh 40. Yes, here I made some calculation error, I guess. 1 lakh 40 plus 75,000. We should take 75,000. 11 lakh 65,000. 11 lakh 65,000. Calculation error. So, calculation error. So, you also please be careful when you are calculating in exam tension. Perfect example for you. See, I am doing this in a tension to finish the video in a quick time. So, we are doing mistakes. You should not do that. Okay. Right. Next, amount of ITC. ITC, so there I have given regarding generators, they have purchased here two generators. On two generators, each costing 1 lakh means 2 lakhs, two generators. On that, you can take ITC 9%, 9%. That means 9 to the 18,000, 18,000 you can take here. Next, for this pipes, you cannot take ITC, that you know. So that means only one purchase you can take ITC, 18,000, 18,000. So there is one point. Next, gross liability before reduction. Gross liability before reduction, if you see here, only this 8,500 is taxable one, 8 lakh 50,000. Remaining everything is exempt. This 7 lakh, 1 lakh, 1 lakh 50, 1 lakh 40, all these things are exempt. So 8 lakh 50 is only taxable. 8 lakh 50 into 9%, 9% we have to go. Okay, because in the option also they have given CGST, SGST separately. So 76,500, 76,500. This should be the right answer. So 11 lakh 65,000 we got, 18,000, 18,000 we got, and 76,500, 76,500 we got. That is case scenario number 4 for you, my dear friends. So coming to case scenario number 5 now, actually, yes, a very good case study actually. So let us go with the questions first. Only 3 questions. They're asking about temporary registration. What is the deadline to apply? You know, within 90 days if you are not going for an appeal. If you are going for an appeal, 30 days. Printing materials for Feb month, what is the GST TDS? Ignore the bifurcation of CGS. That means you should give the full amount. Sometimes in questions they will ask you, what is the TDS under each head? That means CGST, SGST, each head. Suppose if total TDS you have to deduct 10,000, CGST 5,000, SGST 5,000, it should be only 5,000 here answer. But here they are not asking each, they are asking total. So be careful with that. Next, what is the maximum time limit available for declaring the details of such credit note in the GST return? What is the time limit? Maximum time limit available with respect to the said transaction? A very good question on credit note actually. This is going to be superb and mind blowing. Mark it very important and keep it for your last day revision, my dear friends. Now coming to the point. Question, if you see, this is a company, Raghu Impex Limited, Uttar Pradesh. Stationary items pan India basis they are dealing. Proper officer on inquiry has found these people are liable for registration but not taken registration. So he has granted temporary registration. Okay. And outward supplies of printing yes, there is one question on registration. On temporary basis they have granted registration. So when you should apply for the registration, by what date? Within 90 days, correct? So here you are in Jan, 21 days over. In Jan month 10 days, 28 days, and March 31 days. So if you take 10 plus 28 plus 31, you will get 69 days. Still you need 21 days to make it 90. So 21st April 2024 will be the deadline by which you should apply for registration. 21st April. Okay, right. Next, if you see, they have made outward supplies, printing materials, Feb month. Regarding TDS details, these are. To Telangana State Agriculture Department, invoices 2,60,000 including 5% GST. That will bring you value 2,48,000 invoice. So less than or equal to 2,50,000, no TDS. Only greater than 2,50,000, you know there is TDS. So here, no TDS. Next, to UP GST, State GST Department, invoice valuing 2,95,000 inclusive of GST. Again, 2,50,000 it is, equal to 2,50,000, TDS will not come into picture. To Delhi Transport Corporation, government owned transport corporation registered in the Union Territory of Delhi for the supply of its central stores located in Ghaziabad. Okay, so this also 2,97,360 inclusive of GST 18%. If you remove GST, it is 2,52,000. So 2,52,000 means yes, greater than 2,50,000, you will get TDS. So here, you know, 2,52,000 into what is the TDS percentage? Here you should take total amount. If you remember, you should take total amount, that is 2%. So into 2%, if you take 50, 40. So this should be the answer. Okay. So total 2,52,000 TDS. Hope you have understood this TDS point. Next, if you see, September 2024 company found, in September 2024 company found invoice to a customer was erroneously charged higher, 52,000, and that invoice was issued on 31st March 2024, and company issued credit note for this on 1st October 2024. They filed a relevant annual return on 15th June 2025, and September 24, October 24, they have filed returns on 31st October and 19th November respectively. That means if you understand, invoice is on 31st March 2024, credit note 1st October 2024, annual return of the relevant financial year 15th June 2025, September return 31st October, October return 19th November. Now see, understand the deadline to declare credit note details in the GST return is 30th November of the succeeding financial year in which such supply was made. Where supply was made? This supply was made in 31st March 2024. So the supply was made in the financial year 23-24. 23-24. Be very careful, be very cautious here, very important point. So supply was made on 31st March 2024, and the deadline will be 30th November 2024, or actual date of filing annual return 15th June 2025, whichever is earlier. So 30th November 2024 is the deadline which is by which you should take the, listen carefully, listen carefully, the answer is not yet over. 30th November 2024 is the deadline by which you should give the credit note details in the GST return. Now the uh, what a disadvantage here is, this fellow has identified this late. He has identified this only in the month of September and issued the credit note on October 2024. Your deadline itself is to give that credit note details 30th November, but you have gave the credit note itself on October 2024. This has to be filed in October month GSTR1. You know that October month GSTR1, while filing you have to give that. So October month GSTR1, you should give the effect of credit note, and that October month return itself you have filed on 19th November 2024. Now, if you want to give this credit note details in the next month, that means beyond 19th November, you should give this only in November month. See, either this should be given in October month return or November month return. November month return you will file only after 30th November. That means, technically speaking, November month return you cannot give this credit note details, because November month return you will file only in the month of December. By that time, this deadline would have been over. So if at all you have given that credit note details, you should have given that only in this October month return. When you have filed this October month return, 19th November, you have filed this October month return. That means if you have not given this credit note details in the October month return by 19th November, you will not get an opportunity to file this credit note before 30th November in any other return. Are you understanding the point? Because if you miss this opportunity, you should file this credit note details only in November month return 2024. November month return, you will file only in December. By the time, time limit itself is over. So they are practically testing your knowledge here. Hope you have understood this. Okay. So such a beautiful point on credit note. Yes. Hope you have enjoyed this discussion, right? So I repeat, actually this should have been given in November 2024 return. After this November 2024 return, you will file only after 30th November. So technically speaking, credit note details cannot be given after 19th November 2024, because you will not get an opportunity to file anything. Okay, a super duper point. So the answer here is 19th November, a extraordinary point tested by the institute. Okay, hope you have enjoyed this discussion, and even my iPad has enjoyed, or my system has enjoyed the discussion. So it is like giving that what special effects, right? So next, coming to case study number 6. First, let us go with the questions. First one is like interstate outward supplies of Sandeep. Here the interesting part is on which Sandeep shall pay tax. Sandeep is a supplier here. Okay, that means RCM sales you ignore, only focus on FCM sales, forward charge. The amount on which Sandeep is required to pay tax under RCM. That means RCM purchases you talk. Tax payable before set off of ITC. Okay. Now, if you see here, first they asked interstate outward supply, Sandeep shall pay tax. And here, tax payable before setting off ITC. Okay. Now, listen carefully here. The information what they gave is Sandeep is from Maharashtra, training services he is providing. In October, he is providing training camps at different cities. Uttar Pradesh General Public he has provided services, 3,45,000. And again, Arihant Private Limited, registered in Goa. For them, he has provided 2,25,000. And he is also charging rent from this particular Arihant Pharma Limited for the 20 employees for whom he is giving training. Per day, 10,000 is the rent. Okay, for the stay of these employees. But this is a residential building given to Arihant Pharma Limited. The Arihant Pharma Limited is registered in Goa, and we are giving them training also for their employees, and also we are giving them the residential property on rent. Sandeep is giving the residential property on rent. So in that case, please understand here, I have just made a flowchart to simplify. To general public, he is charging 3,45,000 training fees. In Uttar Pradesh, this is happening. So, training and performance appraisal services, like if it is unregistered person, where this training and performance appraisal services are provided, that will be the place of supply. Okay. So, Uttar Pradesh is place of supply. This is interstate. Okay. And Arihant Pharma Limited is registered under GST, registered in Goa. Registered in Goa. Sorry. So, here, place of supply is what? Goa. Okay, so this is also interstate supply. And now, if you see, he's renting his property where the location of supplier is Maharashtra, place of supply is uh, Maharashtra, because it is related to immovable property. Place of supply is Maharashtra. And please understand, any person renting the residential building, supplier may be registered or unregistered, doesn't matter. But if the registered, or if it is residential property given for rent on commercial purpose to a registered person, entry 5AB will come into picture. That is RCM will come into picture here. Okay, so he has provided rent and which RCM will come into picture. Okay, this is a sale again by this fellow, but this is intrastate sale. That is important. This is intrastate sale, and RCM will come into picture here. Okay, fine. Next, they have asked you a question. So these are about the sales. So there are three sales here. We have discussed the three sales, and next they have given he has hired a bus from Ravi, 50,000 for transporting trainees 30 days. Cost of the fuel is included in that. See, renting the vehicle where cost of the fuel is included if it is provided by non-body corporate to a body corporate. Here Ravi is giving it to Sandeep. Both are non-body corporate, so RCM will not come into picture. So renting, the purchase of the renting services of bus is FCM. And next, he is taking security services from Protective Service Limited for 35,000. Security services, if it is provided by a person other than body corporate, then only RCM. So here it is Protective Security Limited, which is a body corporate. So RCM will not come, FCM only. So these are the two purchases, okay, on which he can take ITC. Now, that's all. Three sales, two purchases they have given, and they give GST rates 9%, 9%, 18%. If you see what are the interstate outward supply on which Sandeep shall pay tax. See here, first is interstate and second is SCM sale. These are the two sales on which both are interstate and on which Sandeep is liable to pay GST. So 345 plus 225, it is 5,70,000. Amount on which Sandeep is required to pay tax under RCM. He has two purchases, both are covered under FCM. So on RCM, he need not pay any tax. So it is nil. And finally, total tax payable before setting off of ITC. Here, this is the interesting question. If you see here, the trick is here they asked you interstate, and here they're asking total tax payable. He has three sales, And please understand, out of these three sales, one sale is covered under RCM. That means recipient is liable to pay GST. So what is the tax payable by Sandeep? By Sandeep, sir, he has to pay tax only on this 345 plus 225. That is 5,70,000. 5,70,000 into 18% GST, because they did not give any bifurcation, and of course IGST interested. So it is 1,02,600. Hope you have understood that. That is what the case scenario. Very simple one, easy one. Yes. So coming to case scenario number 7 here, actually, the first questions, coming to questions, they are simply asking due date of issuance of invoice and what is the value of such invoice with respect to the works contract they have undertaken. Next question is regarding what is the consignment value of the goods which are sent to Mr. Mathur for the purpose of e-way bill. Next, remaining balance of credit ledger and cash ledger is what they are asking. Okay, fine, simple one. Let us take this first. This is a partnership firm registered in Odisha. On 20th March, they are entering into a contract for painting services, and the whole value is decided as 2 lakhs actually. The due date is to complete the work is 20th April. But due to some disputes, the painting services were stopped abruptly on 31st March 2025. Only 60% of the work is done till that date. Obviously, when any service ceases to complete, ceases before completion, ceases before completion, at the time of cessation, you should raise the invoice, that is on 31st March for the work done 60%. That is 2 lakh, 60% is 1,20,000. So option 31st March, 1,20,000. Option C. Okay, right. Next, received a new order from Mr. Mathur, Kerala on 25th April, both taxable and exempt goods, 55,000 worth. Out of which 10,000 is exempt. So total 55,000 value, and out of that 10,000 is exempt. Value of exempt goods is separately mentioned in the invoice. Both goods are independent to each other, and IGST was 18%. He issued a single invoice for both taxable and exempt supplies. So that means, as you know, 55,000 is the value, out of that 10,000 is exempt. So 45,000 plus 18% should be the consignment value, that is 53,100. But here one comedy is institute has given a wrong answer here, saying that 63,100. 63,100 if you get, you will get only when it is a bill value. I mean total, the same invoice they are using, invoice come bill of supply we can call it. So that value is 63,100. But the question is clearly consignment value. Consignment value means only taxable value plus GST. And the another comedy part here is, or the fun part here is, sir, here they give meaning consignment value is calculated by adding the value of taxable goods, exempt goods and tax charge. It is like, oh my GST. Okay, seriously, I didn't understand the logic. If you come across that, or if you understand that better, please send me in the comment box. So that is what the point. Okay, mistake. Let us ignore that. Now coming to the next one, they have received a GST refund of 50,000 erroneously and credited to cash ledger. You know, any refund which is erroneously granted in cash, that you should repay in cash. Okay, refund shall be refunded in cash because it is erroneously given to you. And interest amount 1,100 is there, that is also payable, that also should be paid in cash because of some late payment of taxes, etc. The firm's output tax liability for April month is 2,50,000, including output tax liability if any on the above mentioned transactions. In these transactions, whatever, if there is liability, including that, it is 2,50,000. And opening balance of credit ledger is 2,60,000. Opening balance of cash ledger is 70,000. All amounts are exclusive of taxes. Okay, now as you know, remaining balance of credit ledger, if you see in credit ledger already 2,60,000 is there. Out of that, 2,50,000 if you are paying, setting off your output tax liability, 10,000 will be balance in credit ledger. Okay, 10,000 is credit ledger balance. In cash ledger there is already 70,000, and out of that 50,000 should be paid only in cash, that is wrongly refunded. Next 1,100, the late payment, whatever it is, that should be paid in cash. After that 18,900 will be left out in cash. Okay, so the answer will be 10,000 and 18,900. This amount will remain in the credit and cash ledgers respectively. This is case study number 7 for you. So coming to case scenario number 8, if you see now, case scenario 8 talks about, see this fellow, there is a person by name Mr. Mohan Raj purchasing an iPhone in the month of April. What is the place of supply they are asking? What is the value of outward supplies of Mr. Mohan Raj for the month of June they are asking? ITC of Mr. Mohan Raj including RCM transaction for the month of June, each under CGST, SGST. That is what I told you in from last case studies. They will sometime ask total, they will sometime ask each. Okay, fine. Next, they have asked, what about the goods returned in August to Mohan Raj? What should he issue for reducing his GST paid? Straight away we can say credit note, but here the confusing part is they give B2B credit note, B2C credit note. So which credit note we have to check? Okay, based on the customer. Now come to the point. Here this is about Mr. Mohanraj Kerala unregistered. He is dealing with cosmetic items within Kerala. He ordered an iPhone online for his son who is in Maharashtra. Now itself we can understand. So billing address, purchase of goods by an unregistered person through e-commerce operator, billing address, shipping address is different. So shipping address will be the place of supply. So this fellow is from Kerala and son is in Maharashtra. So Kerala address is billing address, son's hostel ship address is shipping address. So place of supply is Maharashtra. Simple. Supplier is located in Delhi. All these things not relevant for us. Provision, you know, obviously billing address, shipping address, different e-commerce operator, unregistered person. Shipping address will be the place of supply. Okay. Next, aggregate turnover exceeds 40 lakhs, and in the month of May he applied for registration in Kerala in the name of Mohan Raj and Co. Fine, super. For the month of June, they give 3 transactions. In that, he supplied stock valued 1,50,000 to unregistered buyer in Kerala. Out of that, 50,000 was returned to him in August. For June month, he made sale 1,50,000. August month, returns happened. This is sale. Okay. Now, as you know, there is one question regarding goods return. What we have to do now? Here, the buyer is unregistered fellow, so we can understand it is B2C credit note. B2C credit note. This is the answer. Okay. Next, Mohan Raj paid rent of 10,000 rupees to local municipal corporation shop taken for on rent at bus terminal Kerala. So this is intrastate supply only Kerala, all that. And here he is paying rent, commercial property to government. Recipient is registered now, obviously entry 5A, you know, RCM. So this is purchase covered under RCM. He paid rent 20,000 residential house for his personal purpose. Renting of residential building for residential use, obviously exempt under GST. So this is exempt under GST. Simple information. All amounts are exclusive of tax. On goods it is 2.5, 2.55. Services 9, 9, 18. So this point you should be careful a little bit. And they have asked, first question we have answered, value of outward supplies of Mr. Mohan Raj for June. June only 3 transactions. In that one supply is there. In that value is 1,50,000. Return is happening next month. Okay, sorry, that next month. So now for June month, value of supply is 1,50,000. You should not reduce that. So it is 1,50,000. To trick this question, actually, they should have given one option of 1 lakh actually. Next, what is next question? What is the ITC available to him for June, including RCM? There are only 2 purchases. In that one purchase only taxable and that too under RCM. So 10,000 into this is service renting. So you should put 9%, 9% each. So 900. Here they asked each under CGST as GST. So 900 is the answer. Okay. Next, rent of 20,000 residential. Oh, so all these things. Sorry, question we have to check. Correct. A question also we have answered. So this case study is over. Chaka chak. Now coming to case scenario number 9. Questions, if you see, they're asking Maurya and Co. Till what time they have to retain the books of accounts for the financial year 17-18. Next, they're asking about gross amount of TDS, ignoring the breakup, CGST, SGST, all that. So always ignore the breakup. Okay. For the supplies made to various governments. Next, excess claim of ITC. What is the interest you have to pay for the excess ITC you have claimed? Let us go with the case study. Maurya and Co. registered textile manufacturing in the state of Tamil Nadu, 17-18 financial year. For that furnishing annual return GSTR 9, the due date was 7th Feb 2020. This is the interesting point here. We always have that, like, we remember what is the time limit to maintain the books of accounts now? 72 months from 31st December. 31st December is not the provision. 31st December is the due date for filing annual return. So 72 months from the due date of filing annual return. So here they give annual return due date is 7th Feb 2020 means from that we should take 72 months. Actual date of filing, that is not relevant, and no appeal is pending. If appeal is pending, 1 year from the date of disposal, whichever is later, you know that. So from 7th Feb I should consider 72 months. So 7th Feb 2020, 72 months means 6 years. So obviously 7 to 2026 should be the answer. Okay, right. Next, supplied dhotis and saris to various state governments on in the month of March 2025. These are the details. 2,95,000 including GST to government of Tamil Nadu for Tamil New Year. 2,95,000 including GST if you eliminate 2,50,000. So TDS will not come into picture. Next, supplied dhotis 3 lakh excluding GST 18% to government of Tamil Nadu. So 3 lakh greater than 2,50,000. So on that 2% 6,000 will come ITC. And this third point is literally my story, I guess. From Tirupati, settled in Chennai. So here Supply of saris and dhotis, government of Andhra Pradesh, valued at 368,750, including GST 18%. So if you take 368,750 into 100 divided by 118, it is 3,12,500. It is 3,12,500. The interesting part is here it has been supplied to government undertaking in Chennai, Tamil Nadu, but invoice was issued to Andhra government in Tirupati. That means billing is done to Andhra Pradesh, Tirupati, Andhra Pradesh, but shipping is done to one government undertaking in Chennai. Okay, so now this is build to ship to model. Place of supply is nothing but the place of business of the person who gave you the direction. So location of supplier, Maurya and Co, Tamil Nadu, place of supply, Andhra Pradesh, interstate supply, IGST, TDS will come on 3,12,500. So 2%, 6,250 will come into picture here, TDS. I repeat here, you may misunderstand this. This is build to ship to model. This is the area which you may do a mistake. So please be careful. So 3,12,500. This is build to ship to model. Billing is done by this Maurya and Co. What is the name? Yeah, Maurya and Co. Billing they are doing to Andhra Pradesh government. Shipping they are doing it to some government undertaking of Tamil Nadu. So bill to Tirupati, Andhra Pradesh, ship to Chennai, Tamil Nadu. So the place of business of the person who gave directions, Tirupati, Andhra Pradesh will be the place of supply. Location of supplier, Maurya, Tamil Nadu, and place of supply is in different states. So obviously TDS will come into picture. TDS will not come into picture only when location of supplier and place of supply is in same state and recipient is from different state. Here location of supplier is Tamil Nadu, place of supply is Andhra Pradesh. So TDS will come into picture. Next, for the month of April, wrong availment of excess ITC, 1 lakh they have done. And during this time period, starting from excess availment up to the reversal, the balance in credit ledger is 70,000, 20,000, 20,000 in CGST, SGST, IGST respectively. Now, they have identified the wrong availment of ITC and reversed that. There is question regarding interest, what you have to pay on the excess claim of ITC. If you see, they have claimed excess amount of ITC 1 lakh rupees, but closing credit ledger balance is always 70, 20, 20. That is 1 lakh 10,000. Okay. So you should see the lump sum figure in credit ledger balance. It is not individually under that respective head. So cumulative balance, it should not fall below 1 lakh. It has not fallen below 1 lakh, the cumulative balance. So that means he has availed ITC 1 lakh wrongly, but he has never utilized that. He has never utilized that wrongly availed ITC. That means interest will not come into picture. That is what the concept. Hope it is clear for you. Okay. So interest will not come into picture here. Interest is nil. Yes, TDS part also we have to check. 6,000 and 6,250, 12,250 will be the answer here. So option C. With this we are done with this case study number 9 also. Now coming to the next one, case study number 10, a very small one. They are asking whether tax invoice issued by Rishabh Enterprises on 3rd July is within compliance of section 31. Next, Rishabh Enterprises has not mentioned HSN code in the invoice. So should they mention the HSN code is what or not is the second question. Next, is Drona Electronics required to deduct TDS is the another question. If you see here the story, this fellow Rishabh Enterprises is from Maharashtra dealing with electrical goods across various states in India. He got a contract with Drona Electronics, a PSU based in Gujarat, and he's supplying electricals worth 3,20,000 excluding GST. And Drona being a PSU, TDS will come into picture because it is excluding GST greater than 2,50,000. So the answer for this is yes. Since contract value exceeds 2,50,000, Drona is a notified deductor. Yes, TDS will come into picture. Next, the goods were removed from Rishabh's warehouse on 2nd July, transported to Gujarat through a registered transporter. Now, please understand, this fellow raised invoice on 3rd July, but invoice should be raised on or before removal of the goods. Goods removed on 2nd July. So, here the answer is whether it is in compliance with section 31. The answer is no. Both the cases they give no. Here, this is the correct option because it must be issued on or before removal of the goods. Okay, that is the answer. Okay. Next, e-way bill generated, all that fine. While reviewing the transaction, accounts manager noticed the tax invoice was issued on 5th August after removal of goods. Okay, no problem. We have answered that question regarding that. He has not issued it on or before removal. Removal is happening on 2nd July. Yes, we are done with that. We are done with that. Rishabh had failed to mention HSN code in the invoice. Aggregate turnover in the preceding financial year is 7 crores. If you know aggregate turnover is greater than 5 crores, now B2B, B2C, both cases 6 digits is mandatory. So, yes, 6-digit HSN code is mandatory for turnover exceeding 5 crores. Answer is done. 0 to 5 crores, B2B, 4 digits mandatory, B2C optional. Okay, yes, this is what 10th case study. So, if you see the next one, Small case study again, case scenario 11. Is tax applicable for stock transfer from Maharashtra to Gujarat? Is e-way bill valid for a stock transfer? What are the consequences for delay in payment of tax by 22 days? And TDS applicable on MP's branch. Is TDS applicable? Applied to local authority. Now, if you see here, Prakash and Sons, which is registered in Maharashtra, having branches in Gujarat and Madhya Pradesh, with the same PAN, they have different registration, separate registration. Maharashtra office procured goods worth 15 lakhs and transferred 6 lakh worth to Gujarat with a delivery challan without charging tax. Yes, so stock transfer from Maharashtra to Gujarat, distinct persons under section 25 subsection 4. So that is subjected to GST, schedule 1 transaction. Next, e-way bill generated. However, Maharashtra branch delayed the tax payment of 3 lakhs on its local sales for 22 days. So yes, if there is delay in payment of tax, there is interest calculation. Interest is at 18% as you know. So interest will come into picture, 18% per annum for delay. Okay. Next, Gujarat branch sold the stock and did not record it properly in the accounts. Anything regarding that? They have asked a question: is e-way bill valid for stock transfer? Yes, of course, e-way bill is required for movement of goods. Yes, it is valid. Next, see here in options they have given yes if between branches only. No, e-way bill is not between branches. It is for movement of goods. So that option is not correct option. So don't feel why this is not selected. So this also done. Next, is TDS applicable? Is the only question left out. A local authority in Madhya Pradesh made 3 lakh purchases from Madhya Pradesh branch, but TDS not deducted. Same state only within the state. So obviously TDS is applicable. So the condition is greater than 2.5 lakhs. Here, see the point is this is a local authority. TDS provisions generally will apply. Let us see the options. So in this question, majorly they have not given any much information on that. They are just testing your provision knowledge on provisions. No if supply is interested. No if supply yes if supply is greater than 2.5 lakhs. No TDS if only services. No yes only if payment is. So you know option B is the appropriate option. Yes, TDS is applicable if it is greater than 2.5 lakhs. Fine. With this, we are done with this case study also. So again, a small case scenario in this. First, what are the statements which are more appropriate here with respect to TCS is the question. First one. Next, is e-way bill required for movement of food items is what another question. Next, what is the implication of delay in TCS? This is the unique question. Unique question means which you might have not seen anywhere actually like that. So or not focused that way. If there is delay in TCS, obviously there will be both interest and penalty. So remember this. Okay. I mean like not that great what important kind of area, so something which is like out of the box question. Okay, so remember this. Next, in this story, Food Express Limited, which is online food delivery aggregator registered in Delhi, collects payments on behalf of restaurants and deduct 1% TCS. Of course 0.5% TCS, no, that is a different story. Now they have asked a question here, appropriate most appropriate statement for TCS. Here if you see, with respect to TCS applicability, yes, TCS is applicable as payment is collected by it on behalf of the restaurants. No, TCS is not applicable since this is not correct. TCS is applicable only if no. TCS is not applicable. No. So obviously this is, of course, while reading the first option itself, you understand that is the correct answer. But still, for safety, we have read the other options also. So TCS is applicable because you are collecting payment on behalf of the supplier. Next, during some GST audit, they have found out that TCS was correctly deducted for payments made in June, but failed to report this TCS in the returns and delayed the deposit of 1.5 lakhs. As we have seen, if there is delay in payment of TCS, interest and penalty both will come into picture, that we have understood. Okay, next. Aroma Cave sent food items to other outlets in Noida without generating e-way bill, assuming food is perishable and not covered. As you know, if it is perishable or not perishable, it doesn't matter. The value should be greater than 50,000. So they should have given even more technical way. S for all goods, consignment value greater than 50,000. So, but still, appropriate option is option B. So that is what the answer, A, B, C. That is the answer. Okay. So that is case scenario number 12 for you. Now coming to case scenario 13. If you see small case study, but there are 5 MCQs here. They're asking what is the place of supply for transaction happening between Mr. X and A and B. That means there are two supplies here between XA and AB. Okay, for that we have to calculate two time of supply, place of supply. Sorry. Next, who is required to generate e-way bill? Next, what is the last day to rectify the mistake done by a transaction with Mr. Z? What is the GST treatment for rented godown? And is Mr. A eligible to take ITC on the mobile phones purchased? Okay, simple case study. Coming to the point here. X Electronics, if you see, registered in Ahmedabad, Gujarat. selling various electronic items. They have undertaken following transactions. Okay. To Mr. A, he has sold Rajasthan 5 mobile phones and instructed A has purchased from Mr. X and instructed X to deliver this to Mr. B in Pune, Maharashtra. If you see, this is a build to ship to model here where X is selling to A is asking X to deliver it to Mr. B. And as the question says, XA and AB transaction, that means X is selling to A is selling to B. But this is a build to ship to model where X is billing to A but shipping to B. So the place of supply will be for this transaction Rajasthan, A's place. And for this transaction between A and B, obviously A is billing to B and shipping to B. So goods are delivered to be Mr. B in Pune, Maharashtra. That will be the place of supply. So for this transaction, place of supply Rajasthan. For this transaction, place of supply Maharashtra. Hope you got that. So Rajasthan and Maharashtra should be the answer. So for this place of supply 101B. For this 101A will be the place of supply. Okay. Right. Next. X Electronics. Sorry. X Electronics made a supply to Mr. Z on 1st July 2024 for 1 lakh and GST, but there was an error related to that transaction discovered in November 2025. This is a transaction related to 24-25 financial year. The deadline to rectify mistake is 30th November 2025 or actual date of filing annual return. In the question they gave they have filed annual return for preceding financial year, that is 24-25 on 31st October 2025. So that means 31st October 2025. So this is the deadline. No complications, nothing here. So just a basic question. So 31st October 2025 is the deadline to rectify the mistake. And there is one more question. Who is required to generate e-way bill for supply of mobile phones? In mobile phones, X is selling to A is selling to B. Clear? There are two supplies here. A can generate or X can generate, not an issue. They give option both should generate, not. That is not the correct answer. Either X or Mr. A can generate. Only one e-way bill is required to be generated. Even though there are two supplies, as you know, only one movement is happening. So for that e-way bill will come into picture. Okay, right. So that is the next one. Next. Because of the festival season, X Electronics took a godown on rent for 6 months, which is near the shop, and the owner is Mr. G, unregistered person. Rent is 15,000 per month. If you see, you are taking a commercial property on rent and from unregistered fellow, so obviously RCM will come into picture. So there is a question here: what is the GST treatment for rented godown? This transaction will be taxable under reverse charge. Hence, Mr. X is liable to pay tax under RCM. Okay, that is the correct option. Next. Is Mr. A eligible to take ITC on mobile phones purchased? See, mobile phones are purchased by Mr. A but delivered to Mr. B. Still, it is deemed to be received. Correct in case of bill to ship to model. If you remember section 16, subsection 2, clause B. So according to that, yes, you should have actually received the goods, but it is deemed to be received, even if it is bill to ship to model. Yes, in case it will be deemed that A has received the goods, input tax credit will be available to him. So not a problem. So that is case study number 13 for you. Okay, Rajasthan, Maharashtra, either X or A, 31 October. Yes, tax payable. Yes, in this case. Okay, B. So that is what? Option. Okay, so that is case study number 13 for you. So coming to case scenario number 14, if you see the questions actually. The questions first of all. Whether transfer of sofas between unit 1 and 2 will be treated as supply. Next, Mahadev Plywood wants to opt for composition scheme, whether they can do that. What is the consignment value for the supply of bed to Punjab? And Kailash Furnitures can cancel e-way bill or not is the doubt for the supply they made to Aramba Associate. Fine. Again, an easy case scenario. This is Kailash Furniture Store, which is registered in Maharashtra under regular scheme. This is important here. Under regular scheme. Two units with a single GST registration again. Unit 1 and Unit 2. If they are having same GST registration, as you know, here there is a question. Unit 1 and 2, there is supply of sofas. If they are having same GST registration, they are not distinct persons. Obviously, it is not treated as supply. Correct? So, no. As transfer between under single GST registration will not be considered as supply. There also no option is there, but the explanation is not correct if you see. Whether under single GST or separate registration, they are saying this is self-supply, not a, so that is wrong. So option B is the answer. Okay. Next. Besides this, they have two additional branches registered under same PAN. Okay, fine. They have unit 1 transferred 10 sofas. Regarding that, we have already answered the question. Okay, not a problem. Other transactions. Kailash Furniture Store supplied one bed to be sent to Punjab. So regarding bed sent to Punjab, we have this consignment value concept, correct? So the consignment value bed is 48,500. And consignment value means we should add GST. So add this also. Packing S will form value of supply. So consignment value means value under section 15 plus GST. So all these things, freight paid by buyer, this is liability of Kailash Furniture. Obligation of supplier discharged by recipient will be added to the value of supply. So if you all these things, it will be somewhere around 63,230. I have did the calculation already in the calculator. Yes, so option will be 63,230. Option B. Okay, right. Next. Kailash Furniture Store has one branch in Jaipur, Rajasthan that is called Mahadev Plywood, and it wants to opt for composition scheme because its aggregate turnover in the preceding financial year is 80 lakhs. See, first of all, here they asked you in the question whether they can opt for composition scheme or not. And this fellow is running two business. One is Kailash, the other name is Mahadev. And Kailash, if you remember in the question beginning, they said it is under regular scheme. So with the same pan, see, if you see here, Kailash Furniture has one branch in Jaipur, Mahadev Plywood. So the point is with the same pan, that means the same fellow is having again another branch and they are doing business with the same pan. They cannot have one fellow going with composition scheme, one fellow going with normal scheme, correct? You know that, right? So they cannot opt for composition scheme. So here the reason no, because the Kailash Furniture has opted normal scheme, and hence if one registered person under same pan opts for normal scheme, becomes ineligible for composition scheme. So option A should be the correct answer. In the first paragraph itself, they told, sir, these people are doing with normal scheme, regular scheme, and they have two additional places registered under the same pan. So we have understood they are under same registration. So if you are under same registration, one fellow with normal, one fellow with composition scheme is not possible. You know that. So now here turnover information, all these things are irrelevant absolutely. Next, Kailash Furnitures received an order from RM Associates for 50 office chairs, but by mistake what they did, they have loaded 50 dining chairs and e-way bill is generated, and this consignment was verified in transit. Consignment was verified in transit. In that case, obviously, once e-way bill is verified in transit, you cannot cancel that. Okay, so option D, if you see the correct option, once e-way bill is verified in transit, it cannot be cancelled. Okay, this is case study number 14 for you. Now coming to case scenario number 15, the questions, if you see, place of supply for the supply made to Mr. Y, aggregate turnover of Raju Stationery Mart for opting composition scheme. Raju Stationery Mart needs to issue individual tax invoice to whom? Which documents he has to issue for the supplies made to Mr. F? Is there any requirement to generate e-way bill for purchases made from Janata Store? And what is the value of supply for the supplies made to Action for Good group? Okay, right, fine. Let us go to the question. Mr. Raju, a proprietor of Raju Stationery Mart registered under GST in Maharashtra, for the preceding financial year, they have given the following details. What are the following details? See, taxable supplies 120, and you know, for opting composition scheme, we need to take turnover here. Interest on deposits not considered. Other exempt supplies will consider. GST will not consider. So it is 120 lakh plus 50, 135 lakhs is the preceding financial year turnover. 135 lakhs. Okay, this is the answer. Next. Hmm. Until preceding financial year, Raju was dealing only in wholesale. Now he wants to go with current financial year with retail transactions also. He's not sure whether he should issue individual tax invoices for the following transactions or whether he can issue consolidated tax invoice. If you remember, there is an MCQ question asking for which transactions he should give individual tax invoice. Unregistered person less than 200 and recipient doesn't need tax invoice. Unregistered person less than 200, you can consolidate. Unregistered person but 200, you cannot consolidate. Unregistered person greater than 200, greater than or equal to 200, you cannot consolidate. Registered person, whatever it is, you cannot consolidate. So for these people, you should give a individual tax invoice to Mr. X, J and R. X, J and R. So he needs to issue individual tax invoice to Mr. X, J, R. This is the option. Next. On 1st August, he supplied stationery items to Mr. F, unregistered person, amounting to 85,000, where 25,000 is exempt, 60,000 is taxable. If you remember, there is a question with respect to Mr. X, what document he has to issue, Raju. So, for taxable supplies, you will issue tax invoice. For exempt supplies, you will issue bill of supply. Hope you remember that. And also you can issue a hybrid document, invoice cum bill of supply. But they did not ask that in the options. They give for bill of supply 25,000 and for tax invoice 60,000 you have to give. Yes, that will be the answer. Next, Raju Stationery Mart has supplied 350 geometry boxes to Mr. Y, unregistered person. The address recorded is Jaipur, Rajasthan. The value is 60,000 including GST 5%, and goods were to be delivered in Indore, Madhya Pradesh. If you remember, the first MCQ is what is the place of supply for the supply made to Mr. Y? Mr. Y is unregistered fellow. Whatever the address is recorded in the invoice, that will be the place of supply, as you know. But if it is both billing address, shipping address, both recorded, you will take shipping address. But here they did not record shipping address. They have recorded only Jaipur, Rajasthan, even though it is delivered to Indore, Madhya Pradesh. So whatever is there in the invoice, if nothing is mentioned in the invoice, supplier address, that's a different story. But here Jaipur, Rajasthan is mentioned, so Rajasthan will be the place of supply. Hope it is clear for you. Next, Raju Stationery Mart has purchased these geometry boxes from Janata Store unregistered person in Taband, Jharkhand. So if you remember, there is a question on this where purchases from Janata Store, should you generate e-way bill or not, like that. There is a question actually, if you remember. Is there any requirement to generate e-way bill for purchases made from Janata Store? See, Janata Store is unregistered fellow, but Raju is registered, no? So, and it is exceeding 50,000, 52,500. So, yes, it is exceeding 50,000. Raju has to generate e-way bill. Correct. Raju has to generate e-way bill. Option B, not option C, because Janata Store cannot generate e-way bill because they are not registered. So, first priority Raju. Next, this Smart supplied some stationery items to Action for Good group on Children's Day. 50,000 worth, including subsidy, where GST is 2,500, 500 local taxes also charged separately. Received price linked subsidy amounting to 10,000 on these items from private organizations. The subsidy received from private organization which is directly linked to price is already included. Yes, it should be included. So 50,000, not a problem. GST will not be added to value of supply. 500 local taxes charged separately. You know, simple one. Value of supply includes this taxes also. So 50,500 should be the answer. Simple one. With this, we are done with particular case study number 15. In case scenario number 16, if you see here, so the questions: what is the solution for wrong invoice raised for the supply made to Z and Co is there? Next, when ABC Footwear shall issue tax invoice to Messrs D is there? Next, whether following statements is correct or not with respect to amendment in GST registration. And the next one is whether ABC Footwear correctly availed ITC for purchases from XYZ Chappal store are the questions. Right. Now, if you see in this question, small question again, ABC Footwear registered in Rajasthan and turnover in the preceding financial year is 6.5 crores. Other transactions of ABC Footwear are given like this. On 1st June 2025, supplied footwear worth 10 lakhs to Z & Co, a registered entity, issued e-invoice for the same. Later on, they have identified there is a mistake in the e-invoice and they are not having any idea how to rectify it. There is a question on this actually, if you see, what is the solution for wrong invoice? Normally, e-invoice cannot be amended, but when you are filing GSTR1, you can just update this invoice details in GSTR1. You can do that. So, ABC Footwear can amend the e-invoice already generated only on GST portal while filing GSTR1. That is the correct option. Coming to the next one. They sent 20 pages to Mrs. D on approval for sale or return on 1st July 2025 and they have approved this on 1/3/2026. If you remember, for D, they have asked when shall issue tax invoice to Mrs. D. So, 6 months from the date of removal, that is 1/7/2025 to 6 months, will be 1st Jan 2026 or approval 1/3/2026, whichever is earlier. So 1/1/2026 is earlier, so that should be the deadline. But unfortunately, that option itself is not there in the given list. So the correct option is 1/1/2026. I don't know how they have given option this one. If I have did any mistake in calculating that 6 months, please let me know in the comment section. Otherwise, give me that confidence. No, we are right like that. Okay. So I don't know how they gave this answer. Okay, let us not worry about that. Now, coming to the next one. They have shifted principal place of business to Kota, Rajasthan. And there is change in principal place of business. That means this is regarding core field amendment. So you should update to the officer within 15 days from the date of change. So here they give two options, 7 days, 7 days, both wrong. And here they give non-core field, this is also wrong. So this is the correct option. Shall apply for amendment in core field within 15 days for approval from proper officer. Okay, that is the point. Next, on 15th Feb, purchased soles, leather, other material from XYZ Chappal factory to be delivered in two lots, and XYZ Chappal store raised invoice for the entire amount, and ABC Footwear also made full payment upon receiving the first lot in Feb month. The second and final lot is received in April month, but they have taken full ITC in the month of Feb. Is it correct? As you know, no, it is not at all correct. You can receive ITC only after the receipt of, you can avail ITC only after the receipt of last lot or installment. So here, this is the option. So taking ITC is wrong. Whether they are correctly availed na? No, the answer is no. Proportionate ITC is also wrong. So option should be B. ITC can be taken only upon the receipt of last lot, even if invoice has been raised and payment has been made. So this is case scenario number 16 for you. Coming to case scenario number 17. So what are the questions here? They're asking about time of supply for services received from Mr. Raj. Correct statement with respect to the transaction with Messrs. Z and Associates. Place of supply for services provided to Mr. P. Eligible ITC by SS Interior Designers. Okay. Now, these people are SS Interior Designers registered in Madhya Pradesh. Turnover of the preceding 3 years they give 22, 23, 23, 24, 24, 25, 6.5, 4.5, 3.7. Greater than 5 crores, you should raise e invoice. Okay. Following are the other transactions. Okay. So, what are those transactions? SS Interior Designers, Mr. Z and Associates, to them they have supplied. Regarding Mr. Z and Associates, there is a one question. Recipient is liable to pay GST under reverse charge mechanism. Z and Associates. So it is supply made under RCM. Okay, this is the question. Second one. E-invoice will be reported by SS Interior as they fall in the category of notified persons. Turnover process 5 crores. Fair enough. Not applicable because RCM. No, it is not like that. No e-invoicing. No, it is not like that. There is no liability for tuition. So once e-invoice provisions are applicable for you in any preceding financial year from 17-18 greater than 5 crores, yes, you should follow e-invoice provisions even though the supply is covered under RCM. So correct statement is statement A. SS Interior Designers provided services to Mr. P. Ahmedabad, registered Gujarat, for his office interior in Jaipur, Rajasthan. There is something, Mr. P, there is place of supply, I guess question. The question is regarding place of supply to Mr. P. Interior designing services to an office, immovable property, Rajasthan, located in Rajasthan. So, place of supply is nothing but location of immovable property. Yes, Rajasthan. Even though this fellow SS Hyderabad, SS Interior Designers, not SS Hyderabad. So, SS Interior Designers, Madhya Pradesh. Even though that fellow is from Madhya Pradesh, this is happening in Rajasthan. So, Rajasthan is a place of supply. Side effects of located next to SS Hyderabad Biryani Center. Okay. Fine. SS Interior Designers availed some services from Mr. Raj. And from Raj related point, there is one time of supply question if you see. SS Interior Designers availed some services from Mr. Raj, unregistered fellow, on 20th October. GST is payable under RCM. Payment was made on 10th Jan and invoice by SS Interior Designers. I'm being more cautious while talking about SS Interior. Okay, fine. Coming to the point, this is RCM, so time of supply will be based on 13 subsection 3. And here we will take date of payment or actual date of invoice raised by the recipient, that is SS Interior Designers, whichever is earlier. So they give payment 10th Jan, but invoice SS Interior Designers issued on 5th November. So 5th November will be the time of supply. 5th November is the time of supply. Next. SS Interior Designers received the following supplies on which GST component is there. So, ITC related question. They have purchased some decor material for floor, ITC. Being interior designers, they can take ITC on that. Catering services they have availed, no ITC. Fitness services, fitness center membership, no ITC. Next, purchased artwork, mirrors, vases to be received. So, not yet received. So, no ITC on that still. So, 1,55,000 is the eligible ITC for them. So, this is the case study. With this, we are done with this case study also. Now moving on to next case scenario number 18. The first question is, which of the following statements are correct with respect to information technology service? What is the place of supply for training and performance services provided to ABC Private Limited and Babu Cones? What is the ITC availed by Tute and Co? Okay, that is what the case scenario, the questions. Now, going to the case study, small one again. Tute and Co, a partnership firm registered in Bengaluru, Karnataka. They gave information for the month of October. Now, they have availed works contract services for repair of its office building, booked P&L. Okay, that means this is a purchase on which you can take ITC. Okay, this column is amount column, not GST column. Okay, please be careful here. Car official use business purpose, for managing partners, block degraded 17 subsection 5. Information technology services they have received from partner's friend, who is Mr. Alan Waugh from Melbourne, Australia. I know Steve Waugh from Australia, but not this Alan Waugh. Fine. Mr. Waugh refused to take any consideration. Open market value of that is 1,25,000. Are you understanding that point? Import of service from a person who is not a related person here. See, partner's friend, please understand, partner is related, partner's friend is not related. Please understand that properly. So, this is not a supply. There is a question on information technology. If you see, which of the following statement is correct with respect to information technology services? This amounts to supply under 7. No, not a supply under GST. No, it is not exempt. It is not schedule 1, so it is not a supply because he is not a related person. Okay, fine. Next, see here, business purpose is there, everything without consideration, but the point is he is not a related person. Next, performed training and performance appraisal services to ABC Private Limited registered in Kerala, Babu Cone's proprietorship Rajasthan not registered. So because he is registered, Kerala will be the place of supply. Because he is unregistered, where the services are performed, they are performed in Bengaluru. Bengaluru will be the place of supply. So Kerala and Bengaluru shall be the answer, the place of supply. Place of supply, ABC Private Limited, Bengaluru. This is, sorry, Kerala. ABC Private Limited, Kerala, Babu Cones, Bengaluru. So Kerala and Bengaluru. Next, what is the ITC that can be availed? He has 2 purchases, 3 purchases. On this, no GST itself. Next, this is sale. So these are the 2 purchases. This is block degraded. So only on this you can take ITC, and they have give GST rates like 9, 9, 18%. And this is, they did not mention interest rate or interest rate. So on 1 lakh you can take ITC 18,000, 18%. The question is also full amount only. So 18,000 is the answer. Simple question, nothing to worry. With this, we are done with this case study as well. So coming to the next case scenario, let us go with the questions. Again, a small one. Value of taxable outward supply, stock transfer of October for registration 1. And second question is value of taxable outward supplies for stock transfers October month for registration 2. And what is the place of supply for garments sold to Mr. X from branch A are the questions. And if you see here now, this is a question regarding Fashion Freaks, a partnership firm manufacturing and trading ready-made garments and also textile fabrics. They are having 3 branches within the state of Madhya Pradesh. That is important. Branch A is in Bhopal, branch B is in Vidisha. Vidisha is a place. Okay, fine. So branch C is at Jabalpur. All are within Madhya Pradesh, and each are dealing with men's ready-mades, women ready-made, and next fabrics and dress material like that. But this has taken 2 registrations, 2 GST registrations for same PAN under same PAN within Madhya Pradesh. One registration 1 is for branch A and branch B. For branch A and B, they have taken only 1 registration, and another separate registration 2 for branch C. Now, there is stock transfer. If you see in the question, there is regarding stock transfer registration 1 and 2. A and B, 1 registration, C is different registration. So, A to B if you send and B to A if you send here stock transfers, they are under same GST number, not distinct persons, not a supply. So, for registration 1, if you see from A, they are sending to B, from B, they are sending to A. So, if you see here from branch C, they are sending to A and B. So, this is for registration 2 in the MCQ, and this is for registration 1, correct? So if you see value of taxable outward supplies on stock transfers, they have asked for registration 1. From registration 1, these are the 2 things they have made. They did not make it to C. If they have made it to C, that is a supply, but here they have not made it to C. So in this case, the answer should be nil. Hope you have understood. A, B both are having same GST number. Okay, so between them any stock transfer is not a supply. Schedule 1 will not come into picture. But if you see from branch C, they are sending to A. From branch C, they are sending to B. This is different registrations. Branch C, branch A, branch C, branch B are different registrations. So these 2 will fall within the meaning of supply schedule 1 without consideration. So 14 lakh 50,000, 11 lakh 25,000, 25 lakh 75,000. This will be the answer. Okay, hope you have understood that. Next, on 15th, sorry, on 15th October, Mr. X, a tourist resident of Delhi, unregistered under GST, coming from Jhansi, Uttar Pradesh, visited branch A and purchased men's ready-made garments worth 29,000 inclusive of GST. Raised tax invoice, FF raised tax invoice, mentioning name and only state of Mr. X being Delhi. In the invoice, they have mentioned name and only state, that is Delhi. So what is the time garments are delivered at the counter itself? 10 1 CA. What is the place of supply? Sir, if it is sold to unregistered person, the address mentioned in the invoice, even the state name is more than sufficient. So Delhi will be the place of supply here. Simple one. So coming to the next case scenario, the next case scenario 20 here. See, they're asking you on which date you are liable to apply for GST registration. And next one, what is the effective date of registration? And Rishabh Enterprises required to issue e-way bill or not for purchase of fabrics and buttons from some person here. Let us see that. Here actually, they have given information. Rishabh Enterprises is a proprietor starting business on 1st May from Haryana. And following transactions he has undertaken for May and June. 2nd May, he has given consultancy services to a person in Uttar Pradesh. Because it is service, you can provide, no need to take GST registration even though it is interstate supply. 4th May, again transportation services 60,000. 5th May, he is making homemade quilts, notified handicraft goods. Notified handicraft goods also interstate supply you can make, you can enjoy 20 lakh relaxation. But here, it will cross 20 lakhs here. So on 5/5/2025, you will become liable for registration. See, the moment you started the business, interstate supply of services you can provide until the threshold limit. So you're providing services, and you're providing goods here suddenly, which is notified handicraft goods, which is 20 lakh limit you can enjoy. But here the 20 lakh limit has been breached, has been crossed. So you're liable for registration on 5th May 2025. But here institute unfortunately gave the answer as 2nd May 2025, but the correct answer is 5/5. So this is a wrong answer. So the correct answer is 5/5/2025. And accordingly, they have given effective date of registration also. They gave wrong answer. They have applied for registration on 4th June. That means within 30 days. So effective date of registration also should be 5/5. But unfortunately, they go 20th June 2025. So which is again a wrong answer. So this is the correct answer. This is wrong. So there is a mistake here in the answer. Please be careful. Now coming to the next one, the e-way bill part here. Mr. Rishabh Enterprises purchased fabric and buttons at value of 59,000 from Rajaji store unregistered person, Ludhiana, Punjab on 25th June 2025. See, 59,000 from unregistered person means, first of all, e-way bill is mandatory because consignment value will exceed 50,000. And because you are purchasing from unregistered person, you are supposed to raise the e-way bill as a supplier because you are registered. So, mm, third option will be the appropriate option. Required to issue e-way bill as value is exceeding 50,000 and same amounts to invert supply from unregistered person. Okay, that is this particular case study. So coming to the next case scenario actually. So the questions, if you see, they're asking about the trust is providing certain activities, out of that which doesn't amount to supply is the first question. Next, value of invert supplies on which RCM will come into picture, July month, but this is for July month. Value of exempt supplies for August month. Value of taxable supplies for August month. ITC available for August month, assuming GST rate is 18%. Okay. Coming to the question. This question is regarding a charitable institution, Manavata Trust, Manvatva, whatever it is, the trust registered under Section 12AB of Income Tax Act, well known for educational and charitable religious activities, liable to register under GST in current financial year, exceeded threshold limit, all that, registered in Gujarat for May. In June, a multinational company, Dhruthara Limited, gifted 500 laptops worth 50 lakhs to the trust free of cost without any intention of seeking any benefit of business promotion. So, donation they are doing without any intention of seeking business promotion means, again, this donation is not a supply, without consideration, no quid pro quo. The trust distributed these laptops to free of cost in the same month to students for who are like economically backward, all these things, for assisting them for their higher studies. Okay, super. Then this is also not a supply, no consideration, no supply. Trust also runs a higher secondary school in the name of Manvata, Manavta, whatever it is, Manavta Higher Secondary School, Gujarat, Higher Secondary School, July, availed security personnel services, perfect security solutions, proprietorship concern for security of the school premises. Consideration is 2 lakhs. Security services, education institution after higher secondary school, school spelling SCH, security, cleaning, housekeeping. These things in the premises. So here for school premises, yes. So this is exempt under GST, and they have received legal services from advocates, which is taxable for the same month. Okay. So security services are exempt, legal services taxable, taxable under RCM, and we can take ITC of that also. This is for the month of July. This is for the month of July for your kind information. Next, trust furnished following information expenses for the month of August being interstate. Here I have noted down all that. So these are purchases in that services received for providing taxable outward supplies, taxable services 3,50,000. On that purchases you can take ITC also. Catering services, just now I told it is exempt under GST. Bus purchased with seating capacity 25%, eligible for ITC. But the twist here is the bus will be delivered in the first week of September. And in the question there is regarding August month. September month they did not ask any information. So for August month you cannot take ITC. Okay. So if you see the question regarding ITC, August month you can take ITC only on this 3,50,000 into 18%. I think the last question. 3,50,000 into 18%. 3,50,000 into 18%. 6.3 something. Okay. So that is 63,000. This will be the answer. Okay. Next, for August month, they are giving another information regarding their sales services provided. So it is running an old age home for 65 years or more. Obviously, where consideration is less than or equal to 25,000 per month per member, it is exempt under GST. Here the consideration is 15,000 and 20 members are there, so it is exempt sale. Exempt sale value is 3 lakh because they have asked value of exempt supplies. Next, it rents out community hall on 15th August for religious function in the first half and art exhibition in the second half, for which they are charging 5,000, 6,000. Here the question should be even more better actually, to the same person. That should have been the case, because if it has been rented to different people for different purpose, yes, per day calculation, everyone will enjoy the same benefit of 10,000. So here that should have been even clear actually. So assuming here the same person, 5,000, 6,000 together, 10,000 or more, so it is taxable. So taxable supply is 11,000 here. It rents out rooms to temple devotees 950 per day. If it is less than 1,000 per day, it is exempt, and from that they are collecting 35,000. So that is exempt sale. And now they have asked value of exempt supplies and value of taxable supplies. Correct. Value of exempt supplies by the trust. This is 3 lakh and 35,000. Taxable supplies 11,000. So value of exempt supplies is 3 lakh 35,000. Value of taxable supplies 11,000. Okay, that is the case. Now coming to the next one. All the figures given above are exclusive of taxes wherever applicable. Aggregate turnover of the trust in the preceding financial year is 15 lakhs. This is the twist in the story. Super duper twist. What is the twist? Now see, if your aggregate turnover in the preceding financial year is not exceeding the threshold limits, legal services provided to you are exempt under GST. Not only legal services, government services also exempt, if you remember. So here the twist in the story is this is exempt under GST, so RCM concept will not come, ITC concept will not come, because legal services provided to a business entity whose aggregate turnover in the preceding financial year does not exceed the threshold limit, exempt under GST. Hope it is clear for you. So now let us go with the questions. Which of the following activities doesn't amount to supply? Free laptops distributed. That's all. Remaining and all, please understand, these are exempt. Exempt is different, not a supply is different. So free laptops is not a supply. Okay. No consideration, no supply. Value of inward supplies on which tax is payable under reverse charge in July. In July month, it has had only two purchases. One is security, the other is legal. Both are exempt under GST. So nothing is payable under RCM. So the answer is nil. So that is what with respect to this particular case study. So now coming to the next case scenario, here if you see, what are the questions? First one is aggregate turnover of Bali bills for September month. Next, Bali bills wants to avail ITC on GST paid on heavy steel machinery which they have purchased in September, which is the correct statement here. Bali bills can claim ITC on inputs received in July preceding financial year up to. So deadline for taking ITC 16 subsection 4 time limit. What is the value of supply of Bali Bills for the month of November? Okay, coming to the point here. Sir, Bali Bills Private Limited is a company registered in Chennai, Tamil Nadu, providing following outward supplies for the month of September. September month aggregate turnover you should calculate if you remember. They have provided interstate details, taxable, exempt, taxable, exempt. Aggregate turnover means taxable, exempt, everything will be added. And also they have sold land of 2 crore in the month of September. Okay, only these are the information with respect to sales of September month. And if you see, land which is sold is neither SOG nor SOS. It will not be added to aggregate turnover. It is schedule 3 item. So 40 plus 30, 70, 70 plus 25, 95. 95 lakh is the only aggregate turnover here. So option B is the correct answer. And next, so always remember this point, sale of land. I am seeing this again second time or third time, I'm not sure. Sale of land will not form part of aggregate turnover. Simple, it is not a supply at all. Next, they have purchased one heavy steel plant and machinery worth 1 lakh. If you remember, they have asked regarding ITC, what is the correct statement? Excluding GST 18%. They have capitalized the value along with the GST. That is important here in the books of accounts and claimed the depreciation also. So they have capitalized both value plus GST and they have claimed depreciation also on that. So obviously you cannot take ITC about that. So now coming to the true statement. ITC related to purchase of machinery cannot be availed since depreciation has been claimed on such amount already. So option A is the correct answer. Next, apart from this, tax invoice dated 25th July uh, with respect to inward supply 50,000 not availed ITC. Okay, yeah, that we are talking about deadline for availing ITC. No, so regarding that, so not yet availed ITC. Fine. They made a supply during November. Base price is 45,000. TCS is 2,500. Subsidy 3,500. But this is for usage of green energy. Subsidies was linked to units of energy saved and not for the aforesaid product. So this is not a subsidy linked to the price. Please understand that. So that means this subsidy you should ignore. Even though this is received from any person other than central government, state government, you will ignore that. So 45,000 base price. TCS also we will not add. So the value of supply will be 45,000. Here the answer. Now coming to time limit for availing ITC, we have to get the information of annual return. They told they have not furnished annual return for the preceding financial year till the end of November. They will furnish it in December. That means 30th November or December, which is earlier. 30th November is earlier, so the deadline is 30th November. Okay, hope it is clear for you. Right. Now coming to the next case study. See here, questions are regarding for the transaction regarding renting of commercial space. What should be the rate of tax is the question. Next one, regarding hotel accommodation to Mr. X, GST payable by ABC Limited is what? Next, what is the correct statement with respect to availability of ITC for procurement of goods meant for CSR? For this, you need not read case study also. Amount of ITC related to such procurement is not available. First option itself is what? Simple. Okay, only 3 questions here. Now coming to the point. This is story of ABC Limited manufacturing in Rajasthan and also having other units in Madhya Pradesh, Gujarat, registered in all the states, and also additionally they are owning and operating a hotel in Udaipur, Rajasthan. They are also having a commercial space which is rented out to registered person. Monthly rent 50,000. Maintenance of that premises is responsibility of ABC Limited. That is, the owner is maintaining the property and charging rent, and also for that maintenance they are incurring certain expenses and recovering from the tenant by issuing the invoice. Okay, and for that purpose they are purchasing some materials also. Okay, now what is the rate of tax applicable on the material used for maintenance was 5%. If you see, the rate of GST for all outward supplies, inward supplies is 18% unless otherwise mentioned. We are purchasing some material for doing maintenance and providing it to the tenant, which is 5%. But rent it is 18%. You know, renting the property and maintaining it is composite supply. So obviously for both rent and maintenance, the GST rate applicable will be 18%. So that will be the option. Okay. Next, they are giving a hotel room to Mr. X for his business conference, something like that, who is an unregistered fellow from Maharashtra. Value of consideration is 25,000 per room per day. Please understand this is Udaipur, Rajasthan, and this fellow is from Maharashtra. But location of supply is Rajasthan, Udaipur, and place of supply also Rajasthan, Udaipur, because location of immovable property. So they will charge CGST and SGST. Nil is wrong, and IGST is wrong. Obviously, CGST, SGST will be the answer. Easy one only. So that is what this case study all about. So coming to the next case scenario actually here. So look at the questions. Correct statement under GST as per hotel. See, most of the cases, this is like hotel accommodation means obviously GST, SGST will come into picture no matter what has happened. So the hotel shall charge CGST, SGST on the invoice. This will be the obvious correct one. Next, place of supply for gift items purchased. What is the true statement with respect to gift items and group insurance policy purchased? What is the correct statement with respect to issuance of e-waybill between factory and warehouse in a non-motorized cart? Non-motorized cart, if you are transporting, it is not required, exempt from generation of e-waybill. So e-waybill is not required to be issued in the given case, irrespective of the consignment value. Yes, no matter whatever is the consignment value, if it is non-motorized cart, no need to generate e-waybill. Most appropriate statement with respect to new warehouse taken on rent by the company. It is regarding GST registration required or not. Let us check. Now, mm, XYZ Private Limited, mid-sized company registered in Delhi, manufacturing, distributing electronic goods in India, and operating over a decade with robust supply chain network across the country. They needs to ensure compliance with various GST regulations, of course, return filing, registration, and payment of tax. Company is exploring to expand its sales channel in India through distributors in each state, undertaken following activities in the month of June. Organized distributor conclave Udaipur, Rajasthan. Distributors from Rajasthan, Gujarat, Madhya Pradesh have attended that. Total cost of that is 25 lakhs paid by Delhi office to the hotel located in Rajasthan. Whether it has been paid by Delhi office or Kolkata office, it doesn't matter. Hotel is located in Rajasthan. So place of supply will be Rajasthan. So location of supply, that is hotel fellow is from Rajasthan. That fellow will charge CGST and SGST in the invoice. So we have finished that answer also. Company purchased gift items for distribution to the participants. The vendor is located in Ludhiana, Punjab, and delivered the goods to the hotel in Udaipur, Rajasthan. The cost of the gift item is 25 lakh and value of individual gift is 75,000. Company purchased gift items from Punjab to be delivered to the hotel in Rajasthan. See, company has purchased, company is from Delhi, it has purchased, bill to ship to model. So, billing to company Delhi, but shipping to Punjab. The place of supply will be Delhi here. The principal place of business of the company on whose directions you have transported them. Okay, that is the answer. Next, purchased a group insurance policy where the premium is 1 lakh and there is no statutory obligation here. And of course, that means it is blocked under GST. ITC is not available. And gift items also not eligible. Company is not eligible to avail ITC in relation to both. So this will be the option. Next, fourth one is also over. Non-motorist got. We have to see the warehouse related point. Took on rent a new warehouse in Delhi. New warehouse in Delhi. This fellow is already registered in Delhi. Storage and dispatch of goods transported between factory and new warehouse. Non-motorized cart. Single trip 5 lakhs. As I told, non-motorized cart means obviously what? No need to take e-way bill no matter what is the value. Okay. The rent they gave 18 lakhs for first 11 months and the same shall be increased to 21 lakhs after the expiry of 11 months. Here the question is regarding warehouse. They want to see whether separate GST registration is required or not. If you see, here this fellow is already registered in Delhi and warehouse is now they are setting up in Delhi. So no need to take separate registration. Let us see the appropriate answer here. Mm, Separate registration is not required mandatorily. Separate registration is required mandatorily. GST registration is required as cash. Not like that. Separate GST registration is required once the rent is more. No. So separate registration is not mandatory. You can declare it as additional place of business and you can proceed because you are already registered under GST. Okay. So that is what the case study. So now coming to the next case scenario. If you see, after grant of temporary registration, company needs to apply for registration within how many days? Generally, when your temporary registration is cancelled, if you are not going for an appeal, within 90 days you should apply for registration. Okay, fine. Input services which are liable to reverse charge mechanism. We should see the question. Which document you have to issue for the invoice issued on 20th Feb? We have to see the question. When company requires to file final return, okay. Which of the statement is correct with respect to e-way bill for Feb month? For the order was cancelled. Okay. E-way bill generated, order cancel means you can cancel the e-way bill also within 24 hours. This should be prima facie the answer. And here, if you look at the options without raising case study, also reading case study, also you can proceed. See, once generated e-way bill cannot be cancelled. Wrong statement. 48 hours, 72 hours, wrong statement. So obviously option B is the correct answer. Without going through case study also, you can tell this is the answer. Okay, now coming to this. Vidula Impex Limited is engaged in sports goods and company did not opt for registration. That is why proper officer is conducting inquiry and saying that you are liable for registration, and he is registering them on temporary basis on 15th June. After granting the registration certificate, the company is availing the following services. That means purchases. Renting of motor vehicle from Blue Taxi Private Limited, where GST charge is 5%. Here, this is the area where you may go wrong. Seeing that 5%, you may feel it is RCM. But for renting of motor vehicles, please understand, supplier should be non-body corporate, but this is Blue Taxi Private Limited body corporate, and cost of the fuel should be included. They did not mention anything about that, so it is not RCM. They appointed Rajesh technical director for advisory role in business. Payment is based on the contract entered, and he is not covered under any employment contract. Because he is not covered under any employment contract, please understand, Director 194J RCM will come into picture. So there is a question on this RCM. Renting of motor vehicles is not RCM, but director services is RCM. So option B is the correct answer. Okay. Next, company issued an invoice, erroneously charged higher value of 34,000, and this is on 28th Feb. You know, on 28th Feb invoice they are asking what should be done. Higher value you have charged, now you should reduce the value. That means you should give credit note. So the answer is give credit note. Okay. Next, in Feb month, they also generated e-way bill for transportation. E-way bill related thing, we have finished the answer also. Let us see. Feb month generated e-way bill, and immediately on generation of e-way bill, buyer cancelled the order before it was dispatched. So obviously cancel the e-way bill within 24 hours, not a problem. March 2025, incurring heavy losses, the company has applied for cancellation of registration. 15th March they have applied, and order for that cancellation was passed on 30th March, affecting the cancellation from 15th March. So 15th March effective date or order of cancellation 30th March, whichever is later from that 3 months. So from 30th June, 30th March 3 months means 30th April, May, June. 30th June is the answer. So fifth one we are already done. So the next case study, if you see, the questions: what is the tax liability of Mrs. Delight Brothers for April month? New orders which received in May month which are exempt under GST. What is the time of supply for the services provided to Coral Limited Company? What is the most appropriate statement for next financial year for Mrs. Delight Brothers? Next, what is the rate of GST for repairing ACs by Mrs. Delight, assuming they intend to pay the minimum rate available? Okay. Coming to the question, a small question. This Delight Brothers is a partnership firm which is doing restaurant business, registered under GST but opted for composition scheme under section 10 subsection 1. Current financial year, the turnover for April is 12 lakhs. And you know, they have asked tax liability for April month. April month, they give 12 lakhs turnover. 12 lakhs, restaurant business composition scheme, 2.5%, 2.5%. So 12 lakhs into 2.5%, 2.5%, you'll get 30,000 each. CGST, SGST. Be careful here, 30,000 each. They give 60,000 each. You should not get confused. In the exam, you may get 60,000, 12 lakhs into 5%, CGST, SGST, 2.5, 2.5. But here they ask each. Each is 30,000. So that is the correct option. Option C. New orders may. They asked with respect to new orders which is exempt. Mess facility. For school, it is exempt. Vishwas, public school, higher secondary school. Knowledge Institute of Technology, Engineering College, taxable. Frontline Hospital, taxable. Okay. So, Vishwas public school only exempt. So, here they have asked a question. New orders which are exempt. Okay. This is exempt. This is not exempt. This is not exempt. So, only option 1. First point is exempt. So, option C is the correct answer. Next, with respect to catering services provided to Coral Limited, they have asked the time of supply. If you remember, annual general meeting, they have supplied some catering services on 3rd July. Invoice not issued till the end of August. That means for services provided within 30 days, you have to raise the invoice. You have not raised the invoice till the month of August, means you have not raised invoice within 30 days. But payment was received on 25th July, paid on 28th July. The invoice is not issued within 30 days. Date of completion of service or payment, whichever is earlier. Completion of service 3rd July, 25th July, 28th July, which is earlier. 3rd July is earlier. That will be the time of supply. Next, the turnover of the restaurant business for current financial year is 48 lakhs. So, beginning of the next financial year, Delight Brothers will close down the restaurant business, will provide servicing of repairing of air conditioners. However, firm wishes to continue composition scheme if eligible, and they are undertaking only intrastate transactions. So, first thing, as you have seen, there is one question here. Most appropriate statement. They are closing restaurant and they are going for AC repair. They can do that, but condition is 10-2A is now available, but aggregate turnover threshold limit should not be like 50 lakhs. 48 lakhs they are eligible. So if you see here, option C will be the most appropriate statement. They are not eligible for composition scheme under 10.1 and 2, but can avail it under 10.2A. Okay. And if they are doing that, they'll pay GST at what rate? 6% because services. That is the answer for next question. Okay. Simple one. With this, we are done with this case study also. So the next case scenario, questions, let us see. So following statements, which is correct, you have to check. What are the services availed by Safe Bank Limited which will attract reverse charge mechanism? What is the value of exempt supply for May month? What is the value of taxable supply for May month? Okay, right. Coming to the point here. Safe Bank Limited is a small finance bank incorporated in April and took GST registration immediately. Received software support services free of cost from head office located in United Kingdom for business purpose in April, and also provided one high-end laptop worth 50,000 to its new managing director as a gift. 50,000. The import of service from your own establishment located outside India without consideration for business purpose is a supply, and giving high-end laptop to employee per employee per annum 50,000, you have that relaxation, correct, is not a supply. So if you see, head office giving services to bank is not a supply, bank giving to MD is supply. So if you look at this first question, which of the statements are more correct? Receipt of software support services from head office is supply, correct one. Laptop to MD is supply, no, this is wrong. Receipt of software services not a supply, wrong. Issue of laptop is not a supply, true. So 1 and 4 are correct, so option B is the correct option, right? Super. Next one, they opened 125 branches across various states and appointed Quick Loan Providers LLP a direct selling agent on pan India basis. Direct selling agent, individual direct selling agent only RCM. This is LLP, not individual direct selling agent. So here RCM will not come. And they needed services of recovery agents also. They have approached Fast Recovery Services Private Limited, a recovery agent on pan India basis. Recovery agent can be any person. Recovery agent can be any person. So recovery agent services will come under RCM. So let us see the question here. RCM, recovery agent services. This is the answer. This one will be RCM. Quick loan providers, RCM will not come into picture. Again, I repeat, because that is not individual direct selling agent. And now they have provided following details for the month of May. Now, if you see for May, they are receiving interest on term loan, which is exempt, interest on credit card, taxable, interest on fixed deposits, exempt, whether it is with SB or anybody, doesn't matter. Commission received on letter on credit issued. For letter of credits issued, they are charging commission, that is not interest for extending loan or advances or deposits. So it is taxable. Documentation charges, taxable. Sale of foreign currency amongst banks and forex dealers, if you remember, sale or purchase of foreign currency is exempt under GST. Okay. So if you see, the exempt values 10 lakh 75, 25 lakh and 15 lakh 60. If you had, I have already added here 51 lakh 35,000, and taxable values 6 lakh 20, 3 lakh and 1 lakh 25,000. If you add that, somewhere around 6 lakh 20, 3 lakh 9 lakh 20, 10 lakh 45,000 will be the answer. So here 51 lakh 35,000 and 10 lakh 45,000 are the answers. Okay, with this we are done with this particular case study also. So now coming to the next case scenario, see, questions are regarding services availed by Mr. Lala. Which of the following statement is correct? Next, up to which limit aggregate turnover he can continue to supply without registration if he does not procure any goods or services which are liable for RCM. Tax liability for freight charges. Which of the following statement is correct with respect to liability of Mr. Lala to register under GST? And what is the time of supply of goods by him in Jan month? Honestly, I have made two mistakes while reading the question here, that also I'll share. Let us discuss the question. Now, Mr. Lala is dealing with tiles, marbles in Telangana, not registered under GST, commenced this business in the month of July. He availed go down construction services from his brother in law. While reading, see, I am recording this video from last 10 hours. For you, the recorded content may be very small, 2 hours, something like that. But I am sitting in studio, recording studio from last 12 hours, not sorry, 10 hours. Morning 8 o'clock I started, now it is 9:30, 13 and a half hours. From 13 and a half hours, I'm in recording studio and doing this all that. So, with that, what maybe the focus got deviated or something like that. So I read it as brother, not brother-in-law. So dependent on him, like that there is a word. So I immediately thought, yes, it is a supply, okay. But here it is brother-in-law. Brother-in-law is not at all a family. And he availed professional services for the business from his son, who is not dependent. Children are always family, whether they are dependent on us or not. He did not pay anything for both the services. Okay, so brother-in-law is not family even though dependent. Son is family even though he is not dependent. So, go down construction services from his brother-in-law, deemed supply. No. Professional services from son, deemed supply. Yes. Neither of the services deemed supply. Both. No, 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 no. So, option B is the correct answer. Option B is the correct answer. Next, coming to the next one. As you know, he is dealing with tiles and marbles in Telangana. If he is not purchasing any RCM supplies, his threshold limit will be obviously in Telangana 20 lakhs. This will be the answer here. Okay, right. Now coming to the next one. On advice of his son, the supply of tiles within his state uh, made supply of tiles within his state only. Okay, we have already answered. So with not making any interstate supplies. Okay, his turnover reached 7 lakhs on 31st October. He planned to expand his business to other states. He has received decent orders from other states also. Okay. In the month of December, he received a consignment of tiles from Rajasthan, prompt carriers GTA in the state of Rajasthan. Goods were dispatched by the supplier on two-pay basis. Right? Freight charges 50,000. GTA pays GST at 18%. Lala paid the invoice amount in the December itself, and this was an interstate transaction. Now, if you see, this fellow is receiving GTA services 18%. GTA services 18%, so forward charge everything I have did, and 50,000 into 18% are 9,000 something like that. It should come. The answer options itself is not there. If you see, 9,000 option itself is not there. At least 4,500, 4,500 if they have given also, I would have selected. Here I am not getting the answer. Then I thought, okay, we forgot that GTA services to unregistered person is exempt under GST. So I forgot that point actually, and I was searching for the answer. Why answer is not there here like that? Okay, this is the second mistake I did in this particular case study. You also may be doing the similar kind of mistakes, because we students, the CA community, we feel the same or we think the same way. Okay, when we are in stress actually. So that is the next mistake I did there. Okay, fine. From now, from next case study, I will be really alert actually, or I will take a break and continue the recording. Now, the point is, sir, in Jan month, Lala made his first interstate supply to Tamil Nadu on 4th Jan. Turnover before that is 15 lakhs. Now, value of interstate supply is 4,50,000. So, because he is making interstate supply, he should definitely take registration. So, there is a question here: which of the following statement is correct with the liability of Mr. Lala to register under GST? He is liable to register in the month of December for receipt of no GTA services are exempt, so no need to take any GST registration. Liable to register in the month of January for affecting interstate outward supplies. Of course, yes. Lala liable to register only when his turnover exceeds. No, this is wrong answer. Lala is not required to register as wrong answer. So option B is the correct answer. Now there is one time of supply also for the goods. If you see the time of supply here, the goods are removed on 4th January. That means this is due date of invoice. And for goods, ADOI or DDOI, whichever is earlier, that is due date of invoice or actual date of invoice. Actual date of invoice is 25th Jan or 4th Jan, whichever is earlier. So, which is earlier? 4th Jan is earlier. So, 4th Jan is the correct answer. That 4th Jan is the correct answer. So, that is what the case study. So, coming to the next case scenario, questions. Donation made by Purvi to Divya Prakash Charitable Trust. What it is, we should check. What are the correct statements with respect to sponsorship fees? We have to check. The nature of supply and rate of GST applicable for the services or packages supplied by Purvi to Bindusar Public School. We should check. And what are the payments received by Purvi in October are exempt under GST? We should check. Okay. Now coming to the point. Simple question again. Purvi is registered in Madhya Pradesh and she is engaged in providing multiple taxable goods and services. And following transactions they gave for the month of October. She donated a sum of money to Divya Prakash Charitable Trust in the memory of her late father for constructing a room. And on that, they have mentioned it is donated by Miss Purvi in the memory of her father on the door of the room so constructed. Here, there is no quid pro quo, you can understand. So, this is not, not a supply at all. So, donation made by Purvi to Divya Prakash is not a supply at all. The good thing with MCQs, you need not write any reasoning, all that. Even if you just select the option, you will get the answer. Full mark. Organized a seminar in Indore sponsored by We Win Cricket Academy LLP. Sponsorship is 1,50,000. We understand here for sponsorship services, Purvi is the supplier. Sponsor We Win Cricket Academy is the recipient. Supplier should be any person other than body corporate. Purvi is not a body corporate. Condition satisfied. We Win Cricket Academy recipient should be body corporate or a partnership firm. LLP is considered as a partnership firm, so this is also condition satisfied. So this will be subjected to RCM. With respect to sponsorship, tax on sponsorship is payable by Purvi under forward charge. Wrong. Sponsorship is payable by Vivi under reverse charge. Perfect. This is the answer. Okay. Next. Bindusar Public School is distributing gift packages to the students containing fountain pen, calculator, tape dispenser, all that on the occasion of Children's Day, and therefore it has entered into contract with Purvi on 28th October to supply 2000 packages for a single price. There is no breakup for the price. That is important. Single price. 250 rupees, where GST rates of pen, calculator, tape dispenser are 5%, 12%, and 18%. This is mixed supply and automatically what 18% GST is applicable. So, mixed supply and 18% GST is applicable is the answer. Next, received following payments for the month of October and earned 1,60,000 for Western music concert. This is taxable. We should see exempt one if you remember the question. And 50,000 for renting space to textile pro, taxable, renting of space. 70,000 for supply of farm labor, exempt. Super. So the answer is 70,000 here. That is the answer. Okay. With this, we are done with this case study also. So the next one, case scenario number 30. You look at the questions first. They're asking what is the value of supply for Dhanush Enterprises, assuming interest on delayed payment is exclusive of GST. Okay. What is the time of supply for advance money of 4,50,000 for supply of office chairs and balance payment 10,50,000? The office chairs means goods. Advance and balance payment, anything. Time of supply will be same. ADOI or DDI, actual date of invoice or due date of invoice. Without reading case study, without doing any time of supply provisions, you can select the answer here. Because for both advance and balance payment in time of supply of goods, 12 subsection 2, answer will be the same. So 5th September, 5th September. This is the option where you have both the dates same. So that will be the answer. Simple. What is the value of outward supplies covered under RCM? We have to check. What about gifts of value 50,000 given to its employees? If you see up to 50,000, you have the relaxation. It is not at all a supply. In all these options, they give supply, supply, supply. This is the only option where they said not a supply as gift not exceeding 50,000 in a financial year by employer employee shall not be treated as supply. Proper explanation. Without reading case study, 5 MCQs, 2 MCQs we have finished. Next, last MCQ is what is the eligible ITC for the month of December for Sarabhai and Sarabhai Associates? Let us go with the question. Sarabhai and Sarabhai Associates is a partnership firm registered in various types of business activities and given the following details. Okay, for the current financial year. Supply taxable goods Dhanush Enterprises 8 lakhs in April. Credit period 1 month. But thereafter interest 12% per annum chargeable on the consideration. Payment is received from Dhanush Enterprise after the lapse of 2 months from the date of supply. From date of supply, you have 1 month credit period time. Still you are delaying. Delaying means interest is what? Thereafter, if there is delay, 12%. That means 1% per month. 2 months happened, 1 month interest free, 1 month there will be interest. So per month, per annum 12% means per month 1%. So if you remember the question, that they said interest is assumed to be exclusive of GST. So 8 lakh into 1% will be the interest rate, or 8 lakh into 12% into 1 by 12 if you charge also 8 lakh 8,000 will be the answer. Simple calculation. Next, this 100 office chairs time of supply without reading the question also we have told the answer. So nothing to worry. In October, it has provided services to Fisheries Department, transportation of goods. And this Fisheries Department is registered under GST only for the purpose of deducting tax at source And if you remember, GTA services provided to Section 51 entities who got registered only for the purpose of Section 51 is exempt under GST, if you remember that. Okay. Next, they have provided services of direct selling agent to NBFC Limited in Mumbai, 50,000. Sarabhai Associates is not an individual direct selling agent, so RCM will not come into picture. This is an FCM sale. Next, organized business exhibition in December month. Sponsorship is 3 lakh from Dara Limited. Sarabhai is partnership from supplier other than body corporate, condition satisfied. Recipient is Dara Limited. Sponsorship services recipient Dara Limited, body corporate. So body corporate are a partnership from condition satisfied. So this is RCM sale. Okay. Next, as a company policy, free gifts to employees 50,000. With this point also we have discussed. So it is not at all a supply. Okay. Next, it availed services of Dhruv Travel Agency free vacation to top performing employees. December 50,000 was paid. Leave travel assistance to employees blocked under GST 17 subsection 5. Paid GST 20,000 membership fees for fitness center for CU. Membership of a fitness center blocked. Okay. If you remember, we have left out with only two questions. Value of outward supplies where tax is payable in the reverse charge. That means RCM sale. RCM sale only this one, that is 3 lakh. So 3 lakh is the answer here. And one thing is eligible ITC for December month. December month he has two purchases and both are blocked under 17 subsection 5. Okay, so nil is the answer. Okay, so with this we are done with this case study as well. So coming to next case scenario actually. So the questions, look at the questions, just three questions. Which of the following persons are liable to pay GST under reverse charge for GTA services provided by Purva Logistics in Feb month? Okay. Next, transportation of which are exempt under GST? You know, defense equipment, railway, defense and organic manure are exempt. Without reading case study, you can tell this. 1 and 3. Time of supply for the services provided by Purva Logistics to Bama Steels Private Limited. Okay. See, this fellow is a GTA registered under GST but did not exercise option to pay tax itself. That means they are under RCM in preceding financial year. Okay, so in preceding financial year, Feb month, they provided services to Kunal Traders unregistered partnership firm. So this is RCM. Amar casual taxable person not registered. So this is not RCM. Hence it is exempt, not specified fellow. Small Traders Cooperative Society registered under Societies Registration Act, RCM. So if you see first question, who are liable to pay GST under RCM? Kunal Traders and Small Traders Cooperative Societies 1 and 3. Next, this one we have discussed. Okay, this and this are exempt. Next, Purva Logistics exercises option to pay GST itself. That means they are going with FCM here. Okay, and 18% from April current financial year. Provided GTA services to Bama Steels Private Limited on 1st April. Invoice on 5th May. Payment is on 6th May. So they have asked time of supply if you remember. So service is completed on 1st April. Within 30 days, invoice is not reached. So you will take completion date or payment date, whichever is earlier. Which is earlier? 1st April is earlier. So time of supply will be 1st April. Okay. So coming to the next case study. Questions are taxable value of canteen service provided by Ms. Chanchala. Maximum time permissible for rectification of errors in monthly return. Obviously, 30th November or actual date of filing annual return, whichever is earlier. Which of the following services are exempt? Without reading case study, you can answer this. Plastic surgery to enhance beauty is taxable. Ambulance services exempt. Renting space to run medical store taxable. Consultancy services in other hospitals exempt. So 2 and 4. 2 and 4. Option C is the answer. Right. Next. So this lady is a doctor by profession, registered under GST and filing returns on monthly basis. Inpatient facility is there in her hospital where room charges are capped 3,000 per day. She provided treatment for various diseases and also she has provided following services. If you see, plastic surgery to the beauty of the face taxable, ambulance services exempt, renting of space to run medical store, all these things that is taxable. She is also acting as consultant in other hospitals and earning 40 lakhs, that is exempt. She also provides canteen facility and received 55,000 from inpatients. 55,000 from inpatients is exempt as per the advice of nutritionist. 35,000 from who are not admitted, that is outpatients, this is taxable. And 25,000 from visitors, this is also taxable. Okay, so if you see canteen services, 35,000, 25,000, total 60,000 is taxable. Option C is the answer. Next, she filed GSTR 3B on June with some errors. Annual return for the said financial year she filed on 31st October. So 31st October or 30th November, which is earlier? 31st October is earlier. So the answer will be 31st October. Okay, 31st October is the answer here. Next, so we are done with this case study. Coming to the next case study. So let us go to the questions. Neelakant & Co. has to furnish a statement of stock of inputs, semi-finished, finished goods, all that, because it's withdrawing from composition scheme by what date? Next, in respect of goods sent for sale on a plural basis, what is the deadline to issue the invoice? Next, eligible ITC for the month of August, ITC to be reversed for the month of September, ignore interest calculation, time of supply for services imported from associated enterprise. These are the questions. Now, so Neelkant registered under GST supplying taxable goods in the state of Karnataka, opted for composition scheme April month last financial year. Its turnover exceeds 1.5 crores on 9th May. So he has opted for composition scheme for this current financial year. But in 9th May, on 9th May itself, 1.4 crore turnover has been crossed and opted for withdrawal from composition scheme. So from 9th May, within 30 days, he has to file this GST ITC 01, giving the details of inputs lying in stock, work in progress, finished goods. So from 9th May to 30 days, that means 22 days still pending in May, and you need 8 days in June. So 8th June will be the answer. Option C. Right. Next, removed goods. Removed goods on 10th June delivered to Chandra & Co. for sale on return. That fellow has accepted it on 15th December. So 6 months from the date of removal, that is 10th December or 15th December acceptance, whichever is earlier. 10th December is earlier. So the time limit to raise invoice is 10th December. Okay. Next, the firm has paid GST during the month of August for the following. GST paid 12,000 for input services, personal purpose, so no ITC. GST paid for motor vehicle, two-wheeler having engine capacity of 25cc, 9,000. Yes, you can take ITC of 9,000. GST paid on computer 19,000. GST portion was included in cost and claim depreciation. Sorry, not eligible. During May, they have reversed ITC of 10,000 for not making payment to vendors within the time prescribed. That is, that 180 days time limit is there, no, that one. This pending payment was cleared in the month of August. That means they would have reversed this 10,000 ITC earlier. Now they can re-avail ITC. So in the month of August, they can take this 10,000 ITC. If you remember, there is a question for what is the ITC available for the month of August? 10,000 plus 9,000, 19,000 they can avail. Okay, most of the students will make a mistake here. They feel like these two are given as answer. No, no, no. Answer is this 9,000 and this 10,000 put together, they have given 19,000. Okay. Next, out of the purchases, ITC for earlier months for following information is given as on September. ITC availed during the earlier months. See, from a supplier XYZ ABC PQR. This is payment pending from 145 days, 199 days, 99 days. So it is more than 180 days outstanding. So this one you have to reverse ITC 15,000. So ITC to be reversed is 15,000. To be reversed in the month of September is 15,000. Okay. Next, Neelkant & Co. received accounting services from Raghu & Co. Associated Enterprise from Sri Lanka. So, import of services from Associated Enterprise. So, in that case, entry in the books of recipient or date of payment, whichever is earlier. Raghu & Co. issued invoice on 1st September. But Neelkant & Co. has recorded this in books on 10th October. Payment was received on 30th September. So, 10th October or 30th September, which is earlier? 30th September is earlier. So, that will be the time of supply. So now coming to this next case study, if you look at the questions, what is the time limit to issue invoice for smartphones which are sent on credit? And in relation to plant and machinery, what is the correct alternative answer here? Next, how shall PR Limited be treated under the provisions of GST law? What is the period of retention of books of accounts? That without reading case study, you can tell 72 months from the due date of furnishing annual return. Validity of GST registration in Rajasthan. Statement which is true with respect to non-payment of consideration by Gujarat go down to Delhi go down. Here, see, when you see this type of things, obviously this is regarding 180 days concept. Here, by reading the options itself, you can say 180 days restriction is not applicable for cases where that is without consideration. Okay, so as you know that restriction of 180 days for non-payment of consideration is not applicable in this present case. Okay, so without even reading the case study, we have answered two questions here. XYZ Electronics Private Limited, a leading electronic goods manufacturing company in Delhi, produces wide range of products, smartphones, laptops, home appliances. Sales by the company are mainly through distributors with a credit term of laptops 15 days, smartphones 90 days, other home appliances 45 days. See, no matter what is the credit period, you should raise the invoice for goods the moment they are removed, correct? So invoice shall be issued before or at the time of removal of smartphones to the distributor. That is the option. Next, company purchased plant and machinery worth 1 crore exclusive of GST at 18%, and this is not blocked. That means you can take ITC of 18 lakhs there. So ITC 18 lakhs, but value should be 1 crore, not 1 crore 18 lakhs. 18 lakhs 1 crore. So you can claim ITC and cost of the asset should be only 1 crore, not 1 crore 18 lakhs. That is the correct option. Next, company planning to demerge its operations with respect to laptops and other computer accessories from next financial year. The demerged entity PR Limited, separate legal entity with wholly owned subsidiary company with having common board of directors. So now PR Limited and this XYZ Private Limited will become related persons. So here in the options they have given related party, distinct entity, additional place of business, sole selling. No, so it is related party. Okay. Next one. So company also participates in domestic and international trade fairs. Electronic Association of Rajasthan is organizing a trade fair in Jaipur, and company wants to participate in that. Further, they are obtaining GST registration as a casual taxable person with validity of 45 days. If you are asking for 45 days validity, obviously they'll give 45 days validity, and the validity of that registration will be, of course, 45 days. So here the answer will be 45 days. I think we have finished all the questions. Yes. Without even reading the balance, we have finished this question also. Okay. So yes, there is something like go down in Delhi to another go down in Gujarat, 5 crore value without consideration. They are doing all these things. So this consideration condition 180 days is not applicable here because here the supply itself is without consideration. So hope it is clear for you. Common repeated MCQ only this one, last 180 days one. This is already seen earlier in past MCQs. So the next case scenario, if you see here, so let us move on to the question straight away. At what point of time tax will be payable on the advance received for 1 crore? Next, so advance received 1 crore on goods or services, we should check and then take a call. Here they are talking about tax is payable at the time of receipt of advance or at the time of supply of goods. So here it seems to be goods. So prima facie the option should be B actually, because for advances received immediately it is not taxable for goods, as you know. Next, total amount for the March to be reported in GSTR1. Okay. Next, what are the options correct with respect to returned goods of 1 crore? Returned goods, if you see here options, even without reading the question or case study, you can understand. Company has an option to issue single credit note against multiple invoices. For returned goods, yes, this is a valid point actually. Company has to mandatorily issue separate credit note against it. No, this is not correct. So you can issue a consolidated credit note, as you know that. Company cannot issue credit note in any subsequent period after the supply is made wrong. Company can only issue a commercial credit note and GST adjustment cannot be done. So this we have to check because based on what is that all that happened, we have to check the story there. Okay, fine. So A and B can be the options. In case of returned goods sold by the company other than the related parties, value of goods under GST. Normally, what is the value of goods? Transaction value should be taken as value of supply. What is equal to no, equivalent to original value plus cost incurred 110%. Transaction value subject to condition. Yes, option D. Transaction value will be the value of supply when you are selling something to unrelated person and price is the sole consideration. Which of the options is correct with respect to invoice of 1 lakh issued by the customer for the expenses related to returned goods? Customer is returning the goods, for that he is incurring 1 lakh expenses and that he is raising invoice on you. Obviously, it is like purchase of services. Yes, you can take ITC on that. So company shall be eligible for full ITC is the answer. Even without reading the case study, you can understand that. While moving the goods from Maharashtra unit to Gujarat unit, the goods shall be accompanied by what? We should check that with the question actually. Okay. Now coming to the case study. Ecotech Solutions Private Limited is manufacturing and supplying energy related products and solutions across multiple states in India and manufactures solar panels and also imports certain category of solar panels based on the customer orders. Company is also providing installation and annual maintenance services to various products for its products. They received advance for bulk order of goods in the month of March, but delivery is in May. Advance received 1 crore. So as we know, this is regarding goods. So as I told you, yes, the tax is payable on that 1 crore at the time of supply of goods, not on receipt of advance. Okay, because it is goods, as you know that time of supply provision, section 12, subsection 2. Next, during the month of March, sold goods worth 5 crores, services worth March month, services 5 crores, goods sold 5 crores, services 1 crore, and goods worth 1 crore sold under multiple invoices returned by customer due to defective quality in the month of March, which were originally sold by the company in the month of Jan. So the company issued GST credit note against that. Okay, so as you know, for this multiple supplies, you can issue a credit note. Okay, so there was one question actually regarding credit note. If you see, um, company has an option to issue single credit note. Okay, there is no need of only issuing commercial credit note. So yes, they can issue a single credit note because the goods are returned. Okay, the company incurred 5 lakh rupees repair for the returned goods to be make them resellable for the related party. Next, customers who has returned the goods issued an invoice for the unit of company 1 lakh related to expenses. For this, we have one MCQ, we have answered that also. Goods were initially sold from Gujarat unit, but later on they have been returned to Maharashtra unit. Subsequently, these are moved by the company from Maharashtra to Gujarat. So from Maharashtra, they are moving the goods to Gujarat. Last MCQ, there is a question on this. The original place of supply, that is Gujarat. And the company is registered in both the states. That means from Maharashtra to Gujarat, when they are moving, both the states it is registered. It is nothing but distinct person. So obviously, they have to raise an invoice. Here, uh, accompanied by the original invoice issued by the returning customer, no invoice by Maharashtra unit to Gujarat unit of the company, that we have to take. Okay, fine. Next, company does not have any blocked credits. They have asked one point on how much turnover they have to, the total amount of supply during the month of to be reported in GSTR1 by the company. See here, the total amount of supply to be reported in the GSTR1 of the company, if you see. So if you see here, sir, there is a question like what is the total amount of supply for March month to be reported in GSTR1. The question should have been even better actually. As you know, there is 5 crore goods, 5 crore goods or 5 crore services, something is it? 5 crore services, sorry, goods, 1 crore services, yes, and 1 crore sales returns. Okay, so actually, it is 5 crore which will have a net impact on GSTR1. There was total amount of supply to be reported actually. So this is like little bit confusing, or like I say, what I feel personally could have been framed little bit better. What can be the net amount of supply, like that they could have asked, because you are reporting invoices also supplies, and you are also reporting supply which is returned. So that wording should have been even better, but still, institute has taken total amount of supply 5 crores. That is after removing the returns actually. So be careful with this type of question. Okay. So that is what point. According to my view, it should have been even better actually, clear. Right. Coming to the point. Next. Mm, because 6 crore is the supplies and 1 crore is the return. Okay. So that way you should have been clear actually here. Fine. Not an issue. So with this, we are done with this case study. Yes. All the MCQs are done. So this case scenario now actually, if you look at the MCQs, what are the correct statements that you have to select? Next, which option is correct again? Which statement is correct again? That one we have to select. Next one, eligible ITC we have to claim. Next, GST liability to be paid in cash, ignore rule 86b. 86b is not applicable, that one we have to check. Okay, so now if you look at the question is simple. Here there are two super duper points which are present in this question. Mahi and Co. LLP registered under GST, providing GTA services to government department registered under GST for providing various activities. Government department registered under GST for providing various other services. A super duper point. That means this is not registered for the purpose of Section 51 for complying with TDS provisions. So here exemption is not available for GTA services. They are taxable, and they have also told Mahi and Co did not exercise the option to pay GST. That means Mahi and Co did not take FCM. That means this is taxable under RCM. A very interesting point. Government department generally most of the cases, not most of the cases, everywhere will be seeing registered for the purpose of complying with Section 51 provisions, all that. But here that is not the case. If they are not registering for Section 51 purpose, the GTA services to them are taxable under RCM if GTA is not going with FCM. A super duper point, right? A very important point, mark it important, or make a note of last derivation adjustments. Now coming to the next one. They have provided services for renting residential building for Mr. Pawan, unregistered person. As you know, renting residential building for unregistered fellow, assuming it is for residential purpose, exempt. So now next one. Mm, Mahi and Co. let out its warehouse to Shankar, who in turn let out an agriculturist for warehousing of agricultural produce. See, we are letting out to Shankar, Shankar will let out to an agriculturist, for them it is exempt. But we letting out that to Shankar is taxable. You are not letting out for any agriculture purpose. Okay, so that is taxable. And these people are providing catering service to Vishwas Anganwadi, and Anganwadi is getting funding from government. Catering services to Anganwadi. Anganwadi will satisfy the meaning of preschool. So obviously it is exempt under GST. Next, they have made some purchases in the month of July. Capital goods where 45,000 GST paid. On that also they have taken depreciation. So you cannot take ITC on that. Next, raw materials purchased amounting to 55,000 where invoice is missing but delivery challan is available. This is the another important point which I said there are two interesting points here. See, delivery challan is not the specified document as per section 16 subsection 2 clause A. Are you understanding the point? In that you have seen tax invoice, revised tax invoice, this bill of entry, input service distributor invoice, all these things are out. But delivery challan is not the document which will give you ITC. So here ITC is not available on this. This is another super duper point which you should take a note of. Next, for the month of July, GST liability 20,000, 10,000 SCGST, 10,000 SGST. Following are the credits: IGST 8,000, CGST, SGST. And there is a question regarding what is the GST liability. If you see here, 20,000 is the liability, but ITC is 8,000. IGST, ITC will become 0, and this will remain 12,000. Next, you can use, after making IGST, ITC balance, you know, CGST will be used for CGST. So still 2,000 credit is there. SGST will be used for SGST. 5,000 credit is there. Sorry, liability is there. Credit is 0. Now this credit of CGST 2000 can be used for paying IGST. So IGST, if you use 2000 there, IGST is still 10,000 payable, CGST is 0, SGST 5,000. So 10,000, 0 and 5,000 should be the answer. So the answer is 10,000, 0 and 5,000. Okay. Next. All the amounts are exclusive of taxes wherever applicable, intrastate unless specified otherwise. Okay. What is the correct statement? GTA services to government is liable to pay tax under reverse charge. Very good. Correct statement. Renting services to Pavan liable to tax under reverse charge. Wrong. GTA services Mahi and Co is liable to pay GST under forward charge. Wrong. Renting services Mahi and Co is liable to pay GST under forward charge. Here, renting services they would have used even better words. Renting services of warehouse, that would have been better, because renting here also it has come now, so you will feel the same thing they are talking again. So renting services they would have used here better, warehouse. So if you see answer, point 1 should come. So based here, based on option itself you have to select, because again the question framing is not proper. So option, this is correct answer, where 1 is there here in option A and C. The second one is a wrong statement, as you know it is exam supply. So now the only option left out for you is C. So that way also you can select the option, okay, in exam. But still the question framing would be even better in the exam is what I feel and I believe. Next, Option which is correct again. Regarding GTA services provided to government department. Government department GTA services are taxable at 5% reverse charge. So this is the answer because GTA is not opting for FCM and this is government department, as I told, not registered for the purpose of section 51. Okay, next. Which of the statement is correct? Letting out of warehouse to Shankar is exempt. Sorry, wrong. Catering service exempt. Correct. Letting out service to Shankar is not exempt. Correct. Catering service to not exempt. Wrong. So 2 and 3 are correct. 2 and 3 are correct here. Okay. Fine. Next. Eligible ITC. You have seen both this 45,000 55,000 are not eligible for ITC. So answer is nil. So that is what this case study. So next, in this case scenario, if you see the questions, simple, a small case study. Tax liability of Veena and Co for the month of July. You have to see here each under CGST, SGST is important. So please be careful with these type of traps. Next, import of services which is treated as supply. The value you have to find here. Next, Veena and Co eligible to claim ITC on stock and capital goods as on what date? Okay, fine. Let us see this. This is a story of Veena and Co. from Jabalpur registered under GST under composition scheme. Outward supplies for the month of July is 10 lakhs, out of which 2 lakh was repairing services. And in the preceding financial year, the firm is doing only trading of goods, taxable goods. Turnover is in the previous financial year 100 lakhs. So, if you're opting for composition scheme, preceding financial year turnover into 10%, that is up to 10 lakhs or 5 lakhs, whichever is higher, you can provide services. Here they are providing only 2 lakh worth of services. So you are still eligible for composition scheme benefit and you can enjoy that. So turnover is 10 lakh, including this 2 lakh. On that 0.5%, 0.5%. As you know, they have asked in the question each CGST, SGST. So 5,000, 5,000 will be the answer. Next, they have imported following services in the month of August. Architect services from Vinod, partner of the firm, resides in France for 1 lakh. This is with consideration and not used for business, whether or not in the course of furtherance of business. To be frank, while reading this question, I have ignored this word 1 lakh. Okay. So the moment they said partner, all these things, and I was in like tired, all that stuff, and I have ignored that. So again, so please you be careful with that. So this is 1 lakh is the value of supply because there is a question what is the value of supply of imported services? And here, management consultancy services from Mr. Lal, a renowned lawyer, Sweden, ex employee of the firm. The value is 3 lakhs used for business, but no consideration was paid. So here, even though it is worth 3 lakhs, we did not pay any consideration, and he is an ex-employee, not current employee. So you should never consider ex-employee as related. Ex is never related to you. Okay, if you know, you know. Okay, so that way here the value is 0. So if you see the question here, import of services by Veena and Co that will be treated as supply is 1 lakh. Next, aggregate turnover is crossing 150 lakhs on 25th September 2025. So, obviously, then he will come to regular scheme. On that date, whatever is there, so 25th September, immediately preceding day, whatever the inputs and capital goods are there, you can take ITC on that. So, the date is 24th September here. That will be the answer. In this case study now, they are asking what is the effective date of registration of Mr. Pawan, what is the consignment value for the goods supplied to Delhi by Pawan, and what is the due date for filing final return. Again, a simple case study. So here they gave some unnecessary information just to make it lengthy. That's all. Apart from that, nothing is there here. If you see, Pawan is providing various services within the state of Rajasthan from May 2025. His aggregate turnover crossed the threshold limit on 4th July and he applied for registration on 2nd August. That means within 30 days he has applied for registration. So effective date of registration will be the date of becoming liable for registration. So 4th July is the answer for first question. 4th July. After taking registration, Pawan started business across India. All these things irrelevant information. Now he received order from Delhi where he is supplying goods worth 45,000. GST is 5%. Along with it, he is also supplying some exempt goods worth 4,000. One invoice is issuing for both taxable as well as exempt goods. If you remember one case study we have seen where like this the situation was, the institute has given the answer like even adding exempt goods, all that. Here if you see, as you know, consignment value, the answer remains the same. Taxable goods plus GST. So 45,000 plus 5% GST, 47,250 will come. So option is 47,250. Here they gave the answer correctly only. Okay. So in that place they have committed the mistake. So please be careful there. Next, again some irrelevant story that he wants to cancel the registration, he wants to shut down his business, and he got placed in a software company. All that story irrelevant, completely not at all relevant. And you know you have to file final return. That information is required for you. So he informed his tax consultant to cancel GST registration. They surrendered that on 25th October, and his application for cancellation approved on 31st October. Nothing else information is there. So 31st October 2025. From that we have to take 3 months. Okay, 31st Jan. That will be the answer. So I repeat here, there is no other information from which date it is effective. So date of cancellation is also 31st October, and we are assuming effective date is also same 31st December. Okay. So from the 3 months you take, that is the answer. 31st Jan will be the answer. So next, if you see in this case scenario, I have seen some two good points actually. So let us see this. The questions first. What are the services where the company is liable to pay GST under RCM? Next, what is the value of exempt supply for the month of May? Value of taxable supply for the month of May. ITC available for this KBC insurance. What is the time of supply for the services provided to IPL franchises? Now understand, this is a story of KBC Insurance Limited insurance company providing life and non-life insurance, carrying business from past 3 years. Now they have given various things that they are providing KBC Insurance Limited services through various insurance agents, which include individuals from LLPs, private limited companies also. However, all of them are licensed under Insurance Act. They availed insurance services. So they availed service of renting of motor vehicle from employees for its employees from RR Travels Private Limited. Cost of the fuel is included. Service provider is charging 5% GST and informed the company that it is claiming ITC only in respect of same line of business. If you see, this is one important and interesting paragraph where they are saying all conditions necessary for availing RCM benefit, cost of the fuel, everything they are satisfying here. All those points are given. But the point is, supplier should be in case of renting of motor vehicle, cost of the fuel is included, should be non-body corporate. But here the supplier is RR Travels Private Limited. So just to confuse you, they are giving so much of information. The fundamental condition itself is violated, that is supplier should be a non-body corporate, but here the supplier is body corporate, so it is FCM purchase. And here for insurance agent services you will see RCM purchases because insurance agent, here it is FCM. So if you see first question here, which services company is liable to pay GST under RCM? Services availed from insurance agent, yes, but from RR Travels, all these things, no. So none of the service, no. So option A will be the correct answer. Okay. Next, coming to the next one. The company is providing following services for May, where if you see Pradhan Mantri Jan Dhan Yojana premium collected is exempt under GST. Premium collected from Aam Aadmi Bima Yojana, see the names itself will tell you this is exempt like that. And this is the interesting point. Premium received on life micro insurance product having sum assured. Life micro insurance product, please remember here, if the sum insured is up to 2 lakhs, then it is exempt. But here it is 2,50,000. That is the reason it is taxable. Okay, please make a note of it. Important, 2 lakhs is the sum assured amount. Next, premium received under group personal accident policy for self-employed women exempt. Fire and special perils policy. Do you feel like this is something government related name? No, so it is taxable. Money back policy, taxable. So the name itself will suggest you something like related to women, children, like backward areas, or something related to agriculture, etc., etc., or Pradhan Mantri, all these things. So the name itself will give you the hint. Nothing to worry. But here, life micro insurance product, you remember properly because some assured maximum limit itself is 2 lakh. Okay. So that is the case, and this is the another important point which I have come across with this. So now coming to the point, see here, exempt if you see 5 lakh, 3 lakh, 8 lakh, 9 lakh. Exempt is 9 lakh and 11 lakh, 12 lakh. So 23 lakh. Exempt is 9 lakh, taxable is 23 lakhs. Okay, we are done with that. Okay, next. Now, this is another super duper point actually. KBC Insurance Limited received a proposal for pandemic insurance for IPL matches from the franchisees. Sum assured is 250 crores, premium 50 lakhs. Said policy is on 1st July and invoice is on 5th August. Premium received on 14th August. Now, please understand here, Supply is completed on 1st July. Invoice is raised on 5th August. For us, we hear everyone, please be careful. We forget here that this is an insurance company. They have a time limit to raise tax invoice 45 days, not 30 days. That means from 1st to July, 45 days means, sir, 15th August will be the deadline. They're raising the invoice on 5th August itself. That means invoice is very much within the time limit of section 31. So the time of supply will be 5th August or 14th August. Invoice or payment, whichever is earlier. Okay, invoice or payment, whichever is earlier. So here we tend to forget that time limit for them is not 30 days, it is 45 days. So please be careful here. A very, very super duper point actually, which I have come across. Fine. Next, they have purchased a car for managing director, no ITC. Purchased a bus, same repeated points, repeated concept we have seen in previous one of the case studies also. Seating capacity 14 persons, 3 lakhs is you can take ITC greater than that. Here, this is another interesting point where they are paying 80,000 for general insurance GST from Amity Insurance Limited, where this is for a vehicle with seating capacity less than or equal to 13 persons. For vehicles less than or equal to 13 seating capacity, repairs and maintenance, general insurance, all these things are servicing are given ITC for. There is an exception for manufacturer of these vehicles or general insurance companies. Okay, so or if the motor vehicle is eligible for ITC. So here this is a general insurance company services taken by insurance company. For them ITC is available here. So because this is an insurance company taking general insurance on vehicle, even though the vehicle, I repeat, even though the vehicle is having seating capacity less than or equal to 13, because it is a general insurance company, it can take ITC on insurance because KBC is giving life insurance as well as non-life insurance also. So they can happily take ITC here. This is super duper point. Please make a note of it. So 3 lakh and 80,000. This is the amount on which they can take ITC. And time of supply 5th August. Okay, that is what this particular case study. Now in this case scenario, a small case scenario, vehicles given on hire by the firm which are exempt under GST, we have to check. Next, what are the correct statements with respect to understatement and overstatement of invoice value? So where credit note, where debit note, depending on the amounts. Next statement which is correct with respect to goods amounting to 8,40,000 with respect to reverse charge mechanism. So here with respect to reverse charge mechanism, you have to issue payment voucher or delivery challan, receipt voucher, all that, any document. So reverse charge mechanism, obviously delivery challan, receipt voucher will not come, it will only be payment voucher. So option A should be the correct answer. Now small case study, without wasting time, let us finish it off. So Aditi Partnership Firm registered under GST, undertaking various government projects, giving on hire motor vehicles with more than 15 passengers to state government electricity department. State government electricity department exemption is not there. Electric operated vehicle more than 12 passengers to local authority, to local municipal corporation, exemption is there. Electrically operated vehicle up to 12 passengers for state road transport undertaken also, it should be greater than 12 passengers. So this is taxable. So second one is exempt. So they have asked which are exempt. So this is exempt actually. So option B is the answer. Okay, right. Next, the firm issued invoices to independent outward supplies. Understated 75,000. That means for 75,000 you will give debit note. Overstated 45,000. 45,000 credit note. 75,000 debit note. 75,000 debit note. 45,000 credit note. So 1 and 4. So 1 and 4. And without reading the question also, you can just answer this third question, but still for your satisfaction, they are also the same content. They have received some supply of goods 8,40,000 on which tax is payable under reverse charge. For that you will issue a payment voucher. That is the most appropriate answer. Firm shall issue a payment voucher at the time of making payment, or firm shall issue a delivery challan. No, firm shall see, first of all, firm shall delivery challan will come when it is not a supply, but this is a supply, correct? Right. Firm will issue a receipt voucher. No. So this is the what the answer. Okay. Right. So with this we are done with this also. So in this case scenario, the question is a small case study. Charitable trust, what are exempt under GST? Next one, value of taxable supplies where donations received by them. For that, which of the following statements are correct with respect to Gurudwara managed by Charitable Trust? So if you look at the case study here, this is Charitable Trust, section 12AB, registered under income tax. They're conducting a 3-day residential yoga camp for for International Yoga Day, advancement of yoga 7,500 per person inclusive of stay and food. Advancement of yoga, you know, it is exempt under GST. And they are also conducting programs for advancement of education for above 65 years in metro cities. You know, in rural area only it is exempt, in metro cities it is taxable. So if you see first question, advancement of yoga is exempt, advancement of education is taxable. Okay. Next, they have received following donations with respect to September. Mr. Sunil Sharma, proprietor of Solid Steel's RO water plant costing 75,000, displayed his firm name in the RO system installed at the premises of the trust, donated by Mr. Sunil, owner of Solid Steels, trusted by all. And they have received Mr. Prasanna, lawyer, donated chase 25,000, love all, printed on the chase donated to the trust. Here, one twist is, see, they have asked a question on these donations, what is the value of taxable supply? See, the answer given by institute is 75,000. But please understand, they're assuming that here it is if you look at the explanation here, they gave the answer if donation is received with specific instruction, mutual understanding between the donor and receiver, the same will advertise, promote business, or such donation will be, if should not come in MCQs first of all, because this is not a descriptive answer where you just write the answer and make the examiner understand what is your understanding. So this answer or explanation, I am not happy. So it should have been even better actually, because students will also feel like yes, there is no quid pro quo because he is printing the name and giving. There is no such a requirement like they are not donating if there is no printing, or if they are donating only with the purpose of advert. There is no such information actually. So you just said they have donated and they have displayed their name. Displaying the name itself will not give you the understanding it is for uh, quid pro quo all that. So answer should have been like question should have been little bit more better is what I felt actually. Fine, assuming in exam there won't be such confusions. Next, charitable trust owns and manages gurudwar, renting the community halls located in the presence of gurudwar 8,500 per day for a marriage function. So renting of community halls less than 10,000 per day is exempt, you know, but they are renting the commercial shops for a rent of 10,000 per month per shop. Shops also less than 10,000 per month per shop is exempt. This is equal to 10,000. So it is taxable actually. So if you look at this, renting of community hall is exempt while commercial shop is taxable. Option B is the correct one. So in this, I am not happy with this question 2 itself properly. Fine, that's not a big deal. Let us move on to the next one. So in this case scenario, actually, they're asking what is the effective date of registration and ITC for inputs held in stock as on what date you have to take ITC, and the statement, which of the statement is true with respect to details of conveyance in part B of the e-way bill, validity of e-challan. Okay, again a small MCQ, small case study. Vedanshi and Co partnership from doing retail business from 1st April became liable for registration on 1st October. Became liable for registration on 1st October, na 30th September, whatever the inputs are there, they are eligible to take ITC on their stock inputs. Applied for registration on 10th October. So within 30 days. So effective date of registration is 1st October. So 1st October will be the effective date of registration. They need to transport one consignment to the transporter and then to consignee. So from their location, they should send it to transporter, from transporter to consignee. Distance within the same state between go down of the firm and the transporter is 20 kilometers. You know, within the same state, consignor location to transporter location 50 kilometers if it is there. No need to fill part B details. So if you see, part B need not be filed in respect of transport of consignment from go down of Vedanshi and Co to the transporter location is correct option. In option B, they gave transport of consignment from transporter location to consignee location. No, that is not the correct option. This is the correct option. Because yes, one more point is there here. They said from transporter location to consignee location is 99 kilometers respectively. So you should definitely fill part B there. So this will be the correct option. Okay. Next, they gave information regarding while filing the return November month, they have generated e-challan on 5th December. They have asked e-challan validity. E-challan validity is 15 days from the date of generation of challan. So 5th December they have generated, not till 20th December it will be valid. Again, a small easy case study. So again, a small case study. They're asking you aggregate turnover, GST liability and reverse charge. Following statement which is true with respect to security services by Shanki consultants. So now Shanky Consultants is a partnership firm registered in Delhi and as a regular taxpayer and providing following services. Security services 2 crore to registered business entities. Security services. See, these people are like what? Providing security services. Supplier is any person other than body corporate and recipient any person registered under GST. So RCM will come into picture. But still, this is a turnover. Manpower services. Yes, this is turnover. Auditing services. This is turnover. So turnover includes all outward supplies. Only inward supplies are not included there, but here it is an outward supply. So 2 crore, 5 lakh, 1 crore. So 3 crore, 5 lakh will be the answer. Okay, 3 crore, 5 lakh will be the answer. Next, other information. This is related to purchases. Shanky Consultants is paying sponsorship fees 70,000 by Banarsi Das Private Limited. So this is a purchase. This is a purchase. But the interesting point is here RCM will not come into picture. There is a question on RCM actually, GST liability on RCM by Shanky Consultants. So this is not RCM because in RCM supplier here is Banarsi Das Private Limited, which is body corporate. Supplier should be any person other than body corporate. So here RCM will not come into picture because supplier here is Banarsi Das Private Limited, a body corporate. Next, Chunky Consultants pays rent 6 lakhs to building owned by Municipal Corporation of Delhi. So this is RCM. So on 6 lakh, they give GST rates 18%. All are interest rate transactions only. So 6 lakh into 18%, 54,000 CGST and SGST. In ICS suggested answer, they give this, but this is a wrong answer because please understand they have calculated the answer based on sponsorship services RCM based on old provision. In old provision, yes, any person providing sponsorship services to body corporate or partnership from RCM, but here now based on latest provision, supplier should be any person other than body corporate. Hope it is clear for you. Next, coming to security services, if you see what is the correct statement, see, Shanky Consultants is providing security services and it is covered under RCM. But being this fellow registered under GST, this fellow should raise a tax invoice, recipient will pay GST. So, Shanky Consultants should issue GST compliant tax invoice. They cannot issue bill of supply because this is taxable one. They cannot issue any other document in lieu of tax invoice and they cannot issue receipt voucher because this is not advance. So, option A will be the correct answer. Now, in this case scenario, there is one super duper point. They are asking buy one get one offer. What is the following statement which is true here actually? Next, with respect to eligible ITC for the purchases of May month, regarding tempo traveler, they have purchased and health insurance. We have to check. Next, which of the statement is true with respect to services received from an advocate? Now, if you see here, this is a company called PTL Private Limited, which is registered as a retail store providing selling merchandise in 25 states. For stock clearance, they are providing an offer, launching an offer: buy one get one free. Whatever you buy, that you will get free. That means one shirt you buy, you will get one shirt free. There is a question on this buy one get one offer. If you see, it will not be considered as supply at all. No, that is wrong. Supply of item where consideration is there under section 7. For other item, it is not supply. No, it is not that way. These are two individual supplies and GST for a single price is charged for the entire supply. And since the single price is charged, same will always be, whenever you are charging single price, it doesn't mean that always it is mixed supply. Because if I say now, for example, you buy my classes and you get books free. So buy classes, get books free. It cannot be called always mixed supply. It is composite supply. So the taxability depends upon whether it is composite or mixed supply. So this is the appropriate option here. Okay, right. Next, in the month of May, to save employee cost, purchased a tempo traveler worth 12 lakhs, seating capacity 25 persons. Happily, you can take ITC here. On that, if you see in the bottom, they give tempo traveler GST rate is 14%, 14%, and all are nothing but intrastate transactions only. Okay, so on 12 lakhs, they can take 14% ITC, 1 lakh 68,000. Next here, well-being employees, for the well-being of the employees, on voluntary basis, they are obtaining a group health insurance. Only statutory obligation we can take ITC, otherwise it is blocked, so you cannot take ITC. So for May month only these two purchases are there, and if you see these two purchases, 1,68,000 ITC is available for group insurance, no ITC. Next, in the month of July, Mr. Raghav, a customer, has filed a lawsuit against the company in the court for not supplying the goods worth 1 lakh. For this, the company has engaged a lawyer by name Mr. Ram, who is an advocate, charging fees of 25,000. He has raised invoice on 5th July and his consideration is not paid till Feb next year. That means July means August, September, October, November, December, Jan. 6 months over, 180 days over. So within 180 days, payment is not done. This is the point which I was talking here. Please mark it important, because in exam tension you will not recollect it, because you see 180 days over, so reversal of ITC will come into picture. But that 180 days condition is not applicable for RCM supplies. If you remember, legal services are covered under RCM. So on this 25,000, 9% plus 9% CGST, SGST, GST will come into picture, payable by the company, and they can take ITC, but this reversal of ITC concept will not come into picture. So if you see, CGST 2250, SGST 2250, advocate service are payable by the company, and condition of payment of consideration along with the tax within 180 days does not apply in the given case, because this is RCM case. So option C will be the correct answer. Okay. So now in this case scenario, compute the tax liability for the quarter ending June. What is the value of supply of Miss Neha for the supply made to Breathewell LLP? What is the time of supply for the same transaction? And Miss Neha need not issue tax invoice, but has to issue consolidated tax invoice for whom? That is what the question. See here, simple question. Miss Neha, supplying services registered under GST, opting to pay tax under composition scheme. For quarter ending June, her turnover is 12 lakhs. You know, 10 2A composition scheme, 12 lakhs means 3% plus 3%, 6%, 36,000. 36,000 will be the answer. CGST, SGST each. This is important, guys. Each. Next. July, she crossed the aggregate turnover of 50 lakhs, opted out of composition scheme, started trading in goods only in July. Now she has got an order from Breathewell LLP on ex-factory basis. This is important because it is ex-factory basis. The sale will end at her factory gate. So outward freight will not be considered for value of supply. Please be careful here. 53,000 and packing charges 5,000 you lakh. Discount given on receiving the last tranche of payment not recorded, and this is nowhere as per the agreement for the same. So because this discount portion is not satisfying the conditions, you will not exclude it. So 53,000 plus 5,000, 58,000, you will not exclude the discount, so you will just ignore this. So 58,000 will be the value of supply, and I repeat, because it is ex factory basis, the supply will end at the factory gate of the supplier. So outward freight is not responsibility of supplier, he will not receive it from recipient, so that will not be added to the value of supply. So 58,000 will be the value of supply. Next, for supplies provided to Breathewell LLP, received half payment on 22nd July, but the goods are dispatched on 25th July. That means removal of goods, due date of invoice. Delivered on 28th July, invoice raised on 30th July. This is actual date of invoice. You know, section 12 subsection 2 will come into picture. Advances received, time of supply is not there for goods, so it will be taxed as per ADOI or DDOI, whichever is earlier. So actual date of invoice, due date of invoice, whichever is earlier. So 25th July is earlier. So the time of supply is 25th July. Next, Miss Neha supplied goods to the following persons: Mr. Pavan, unregistered person; Mr. Umesh, registered person; Rains Trust, unregistered entity. Less than 200, go for consolidated tax invoice, because this fellow is registered, you cannot issue, and this is greater than or equal to 200. So here also it will not come. So for Mr. Pavan, she has to raise consolidated tax invoice. For one supply, what is a consolidated tax invoice? The logic I don't understand, but still, being a theoretical concept or not actually in practice we are seeing. So because multiple tax invoices are there, now you can consolidate. You have raised only one invoice, for that you will give a consolidated tax invoice. Crazy thing. Okay, fine. So that is what the case study. So we are done with this also. So in this next case scenario, they're asking again repeatedly effective date of registration, revised tax invoice you can issue till what date. Next, what is the eligible ITC for Kumar for the month of July? What is the time of supply for Kumar to Mr. Ram? What is the tax liability for July month? If Kumar is paying tax under section 10 subsection 2, he is not paying actually tax under section 10 subsection 2, but if at all he is paying, he is not under composition scheme. If at all he is under that, what is the tax liability? Kumar is an interior designer, started his business in the month of Jan, and turnover up to the month of March is 12,50,000. And next financial year 30th June, he has exceeded 20 lakhs and reached 20,05,000. So he has applied for GST registration as a regular taxpayer on 15th July. Became liable on 30th July, applied on 15th July. So within 30 days he has applied. So the date of becoming liable for registration will be the effective date of registration, 30th June. And he got registration certificate on 25th July. So within 1 month you have to give revised tax invoice, that is 25th August will be the deadline. So 25th August will be the deadline. Okay. Next, on 16th July, he has entered into contract of designing a flat for Mr. Sham, completed all this. See, they have asked, if you remember, time of supply provisions, they have asked for Mr. Ram. So for Mr. Sham, time of supply provisions from that angle you need not see. So dates and all you need not focus. So 22nd July, they have completed, issued invoice for 6 lakhs. If you see for July month, they have asked you the tax liability if at all you are a composition dealer. So for July month, yes, 6 lakh is the sale here that you should point out. And on 5th July, Kumar purchased capital goods amounting to 4 lakh 50, and 25th July to 31st July he has purchased input services amounting to 1 lakh 75,000. But output service is to be provided in August. So if you see purchases, 4 lakh 50,000, 1 lakh 75,000 has been done in the month of July. Okay, so this is the point. Now there is something related to purchases. If you see what is the eligible ITC for Kumar for the month of July, if you see GST rates are 9%, 9%, all are interstate supplies only here in this question. So 4 lakh 50,000 and 1 lakh 75,000, if you see 4 lakh 50,000 plus 1 lakh 75,000 into 9%, if you put 56, 250 should be the answer. So 56, 250, 56, 250 is the answer. Okay. Now, so sales, you can understand 6 lakh worth sales happened in this July, nothing else. Later on, you are moving into August here. So 6 lakh on 6 lakhs. If he is paying tax under 10 to A, 3%, 3%, 18,000, 18,000 should be the answer. Okay, that is the point. Next, mm, in the month of August, Kumar got another contract for interior designing to Mr. Ram. This one time of supply we should calculate. He has accepted on 2nd August. Service completed on 6th August. Invoice on 7th August. Payment received on 29th August. So if you see 6th August service is completed, within 30 days you should raise the invoice. Yes, he has raised the next day itself. So the time of supply will be date of invoice or date of payment, whichever is earlier. So 7th August is earlier. That will be the time of supply. 7th August will be the time of supply. That's all. That is what the case study. Not that greatly difficult anything, all that. A simple one. So next case scenario, if you see, they're asking again effective date of registration, services availed which are taxable under reverse charge, value of supply under section 15 subsection 1, tax payable for the quarter ending September, interest payable for delayed payment of tax. Okay. Here there are two mistakes in this particular case study actually. So if you see, this is a Visali and Co. partnership from manufacturing equipments in Kerala. Manufacturing is important here. Okay, this fellow is a manufacturer. Okay, becomes liable for registration on 10th July, applied for registration on 10th August. This is another crazy important point. If you see 10th July, 10th August, you will see yes within 30 days. 10th July, August 31 days. 10th July 31 days. Sorry, 10th July. Still there are 21 days in July and 9 days in August. Then 9th August is the 30th day, but you are applying on 10th August. So after 30 days you are applying. So date of grant of registration certificate 14th August will be the effective date of registration. A very good point actually here. Now, received sponsorship services. See, sponsorship services, they are doing mistake again and again. This is the second time they are done the MCQs with the old provision, supplier any person. No, supplier should be any person other than body corporate. Here the supplier is body corporate, still they took it under RCM here. But received consignment from Safe Logistics GTA charging 9%. That means GTA charging 9% means it is FCM. Security services from Prompt Security Agency Private Limited. Security services supply should be any person other than body corporate. Here RCM. So for these three services, technically speaking, RCM will not come, but they gave the answer based on old provisions saying that sponsorship services RCM will come into picture. So there is a wrong answer actually here. No correct option. No RCM purchase for this question actually. Okay, so wrong answer here. This is not at all a correct one. Okay, fine, right. I repeat, they have given the answer based on old provision sponsorship services. Right. Coming to the next one. Firm opted for composition levy and its turnover ending September is 14 lakhs, out of which taxable supplies 10 lakhs, exempt supplies 4 lakhs. Here, as I told you, manufacturer entire turnover on that you have to pay GST 1%. So 14 lakhs, 0.5% plus 0.5%, that is 7,000, 7,000 will be the tax payable. Next, coming to the next one. Firm made a supply of equipment to unrelated limited company where market value 12 lakhs, wholesale value 13 lakhs, MRP 14 lakhs, transaction was made at 11 lakhs. You know, when it is unrelated person, and this is the only consideration, and price is the sole consideration, whatever has been price paid or payable, that will be taken as value of supply. So 11 lakh will be the answer here. Now, the next one. There is a belated, firm belatedly paid tax of 40,000 debiting the cash ledger for the month of December. This is the wrong wording what they have used, because answer they have calculated in such a way this fellow is under composition scheme, right? Opted for composition scheme in the month of September, so they're continuing that. That means here you should have asked here for the quarter ending December. Instead you should have used the words quarter ending December month. When you have said month ending December month, that means people, students can assume that sir, for this particular quarter only he was under composition scheme. Okay, so that way they can assume. So technically that would have been better. So based on that, they have calculated. Actually, they have calculated December means because under composition scheme, 18th Jan is due date. So from that they have calculated till 9th Feb. So 18th Jan means what? 18th Jan means in Jan total 31 days, 18 days over. Still you will have 13 days and 9 days. So total 20 days interest they have calculated. Whereas I have calculated interest for 20 days. I thought 20 days should be the answer, but they have did like that. For example, let us take 40,000 into 18% into 20 divided by 365. So you should get 395 to be more precise. So they got some 434 something like that they have answer. But I feel this should be the right answer if you take the question accordingly. But they gave some 434 etc. So question framing, the words are wrong, not proper. It should be quarter ending for ICA answer. Because they gave month ending, I feel like this should be the answer. Okay, fine. Now coming to the next one. So coming to case scenario number 48, time of supply they're asking for Mr. Goods received by Pasupati, amount of ITC except ITC under reverse charge mechanism that can be claimed by Pasupati, place of supply for the goods delivered for the order from Ravi and Co. Simple one. This fellow is registered in Karnataka, trading with various consumer goods. Turnover in the preceding financial year is below the threshold limit, so he is exempt from taking GST registration. He received goods on 1st May under reverse charge. Invoice for that is 5th May. Payment received made 6th June. He entered it in books. 7th June that was debited in the bank account. So if you see, this is time of supply for goods covered under RCM 12 subsection 3. Date of receipt of goods 1st May. Date of entry in the book 6th May. Date of debit 7th June. Sorry, 6th June and 7th June. Sorry, 31st day from ADOI. Actual date of invoice 1st June. Whichever is earlier. 1st May is earlier obviously. So time of supply is 1st May. Okay. Next, he got an order from Ravi and Co. Punjab and with an instruction to dispatch the goods to Kumar and Co. of Tamil Nadu. You know, build to ship to model. So obviously, who is giving instruction? Ravi and Co. Punjab will be the place of supply. Simple one. Next, he paid repair expenses for trucks for transporting the goods. On that GST component is 13,000 and catering services he has taken on Labor Day. On that GST paid is 15,000. See, repair for trucks are eligible vehicles for him, conveyances for him. So 13,000 he can take ITC, but this 15,000 catering he cannot take ITC. And he received first lot of certain goods. GST component is 25,000. You received first lot means other lots are pending. You cannot take ITC on this also. So all are exclusive of taxes, all conditions necessary, all these things. So if you see, he can take ITC on 13,000 if you ignore this RCM related goods. Okay. So the answer is amount of ITC except ITC under reverse charge mechanism, except ITC on services taxable under reverse charge. If you see services taxable under reverse charge itself, not there here. Have you found any services which are covered under RCM here? No, I think just to confuse it. Okay, so now 13,000 is the answer. Okay, with this we are done with this case study also. So we are into finally the penultimate last but one case study. So time of supply they're asking with respect to goods supplied to Velocity Limited, GST payable on outward supply for November month, eligible ITC for November month they're asking. So if you see here, Rajiv Sharma, sorry, Rajiv Sharma is registered under GST, regular taxpayer, Jaipur, Rajasthan, received an order. So this is sale they are talking about of Velocity Limited. For Velocity Limited, they have asked time of supply also. Time of supply also they have asked. Received an order. So 2,50,000 worth, 15th November. And for this payment is on 18th November. Goods supplied on 22nd November. Invoice is on. So removal of goods is happening. Due date of invoice, actual date of invoice, 22nd or 23rd, which is earlier? 22nd is earlier. Okay, they've asked you GST payable on outward supplies for November. If you understand here, this is happening in the month of November, and this fellow is also from Rajasthan. This fellow is also from Rajasthan. So 2,50,000 into 2.5%, 2.5%. That is 2,50,000 into 2.5%. 6250, 6250 will be the output tax. And he's also dealing with laptops and related accessories. Sold a laptop and laptop desk with a single price 1,25,000. Laptop and laptop desk are not naturally bundled, so this is the mixed supply. So on this 18% you should take GST because this fellow is also from registered Ahmedabad, Gujarat. So on 1,25,000 you will get 18% IGST. So 1,25,000 into 18%, if you see, 22,500 will be the output tax. So if you see, the answer is output tax, the outward supply GST payable, 22,500 option for IGST. It is given only in option A. You can straight away tick that option. However, you got the balance figures also. That's a different story. Eligible ITC for the month of November. For the month of November, they give two purchases here. Purchased raw material worth 75,000 for business purpose from Bengaluru, Karnataka. That means IGST. But unfortunately, this is on 10th November. He consumed 10,000 raw material for his personal purpose. That means on 65,000 you can take ITC. Here IGST will be there 5%. That you can take 65,000 into 5%. 3,250 will be the ITC. And he paid 1 lakh rupees for membership in a club located in Udaipur, Rajasthan for employees working in the company, which is not obligatory under law. So no ITC on this. So if you see, eligible ITC will be 3,250. They give two options with 3,250. So this is the option D, where CGST, SGST is nil. Only 3,250, 3,250. This one is the correct answer. Okay, with this we are done with MCQ number 49, case study number 49. So the last case scenario, I don't know how you are feeling. I am feeling really relieved after so many hours spending in recording studio. Fine. Okay. So what is effective effective date of registration? Effective date of registration. Effective date of registration. Date by which invoice must be issued. Okay. Due date for raising the tax invoice. Next, amount of interest for delay in payment of tax under section 50. Okay. So this is story of Bright Star Private Limited, regular GST registered in Himachal Pradesh. And now they are providing following details. They are providing both taxable and exempted goods. Aggregate turnover, all intrastate goods 20 lakhs. Himachal Pradesh threshold limit is 40 lakhs. So 16th August is the liable date and applied on 30th August. So within 30 days they have applied. So date of becoming liable, 16th August will be the effective date of registration. Simple one. Next, they give registration certificate granted, all that blah blah blah. So contract with Zenith Limited they have entered of Manali on 10th September for supplying taxable goods worth 15 lakhs. Payment for this is received on 12th September. Scheduled delivery on 25th September and removed the goods on 24th September. See, for goods, supply of goods where movement is involved, what is the due date to raise tax invoice? Removal of the goods. goods is removed on 24 September. So 24 September is the deadline. 24 September is the deadline. Okay. Next, they have opted for filing of monthly GST return. GST 3B for September month, 19th December they are filing. Due date is 20th December. Okay. Net GST payable in cash is 56,000 and this was paid on 19th December. Clear? So 56,000 into 18% into how many days? 3 divided by 365 days. How many days? You should calculate from 20th October. In October, still 11 days are there. November 30 days and December 19 days. Total, you will get 60 days. So the answer will be 1656.9 something. So 1657 will be the interest. So 1657 is the interest. Okay, right, super. With this, we have successfully finished 50 case studies. Seriously, you have traveled so long in this video, means I salute you. So you have made extraordinary efforts. Even I have made extraordinary efforts, and you too just joined this video and like watch this till then. Seriously, it's amazing. Not a joke. 50 case scenarios watching that. So seriously, I appreciate your patience also, and you should also appreciate my patience by liking this video. And my only request is, or suggestion always, please make sure you are enjoying your preparation. That is what very important. Wishing you all the very best. Stay positive no matter what comes. Be positive and try your level best till the last minute of the last exam. So wishing you all the very best. Thank you and Jai Hind.